Boys, we are continuing with our discussion on company tax rates. Yes, we have already completed the individual tax rates yesterday. We are now moving on to company tax rates. A quick discussion on what and all we have summarized to now. When it comes to companies, we told that when it comes to companies, we are going to split them into two regimes. One is called old tax regime and one is called special tax regime. Yes, old tax regime is going to talk about two companies. One is domestic company, one is foreign company. Domestic company will look at a turnover of 400 crores for previous year 23, 24. Very good. Tax rate will become 25%. If not, the tax rate is 30%. Company incorporated post 23, 24 automatically gets 30% as per ICA standards. Yes. Then we have foreign company. Foreign company is going to be taxed at 35%. And then we have discussed about surcharges. Yes, how does a surcharge operate? When it comes to companies, surcharge will operate in a case where the turnover is up to 1 crore, you will not levy surcharge. Turnover is from 1 crore to 10 crores, you levy a surcharge of 7% for domestic company. More than 10 crores, you levy 12%. Whereas if it's a foreign company, it is 2 and 5. This is what the tax rates are. Yes. Then we moved on forward to discuss about the special tax regimes, where we said that when it comes to special tax regime, we have two kinds of companies. One is called 115BAA and one is called 115BAB. 115BAA being applied to every domestic company at a tax rate of 25.168. 22 plus 10 plus 4 is what the tax rate is. Then we have the domestic manufacturing companies, which are 115BAB, getting a tax special at 17.16. Very good. You get a tax rate of 17.16% for your attempt. Yes. Yes, but we also started discussing a few other tax rates, people, where we spoke about the fact that when you are going to be taxing a manufacturing company, if there is going to be any unreasonable profits, you're going to make some profits because of transfer pricing adjustment. Every profit which you're going to tax will be at flat 30 rates. Flat 30 rates, 30 plus 10 plus 4 is what the tax rate is going to be. Yes. Apart from that, we started discussing on how does the company look like. Some conditions we said that when it comes to a domestic manufacturing company, there are some rules you need to satisfy in order to be eligible to claim this. Yes. Conditions, if you can think of top of your head, you should be into manufacturing after 2019, before 2024. You should only be in the business of manufacturing and should not be doing any other activities except if it is incidental in nature. Yes, so business should only be manufacturing, should not be any trading business unless it is incidental to the main operations. When it comes to manufacturing, we also discussed a few manufacturing which are not covered. Items like mining, printing, cutting marble slabs, then very good, bottling gas into cylinders. All these items are not eligible for manufacturing cases, At the same time, we discussed when it comes to buying of machinery, you should only buy new plant and machinery. You can only buy maximum 20% old plant and machinery. And we discussed as we completed yesterday's class that we only speak about plant and machinery. We don't talk about any other assets. Any other assets are still eligible for deduction. You're not having any issues there. And finally, we discussed that the company should not be formed by splitting up or reconstruction of an existing business. So when you create your company, there should be no splitting up and reconstruction, post which anything can happen. It doesn't really matter. Yes or no? Yes. Although people, let's be careful. It says company should not be formed by splitting up or reconstruction of existing business, which means I'm not just talking about the company. I'm also talking about a business line. It should not happen that after 5 years you end up buying a new business line itself, in which case it will still be called as a splitting up or reconstruction. If your existing business is going to take over some assets, that is what will not be disallowed. Yes, but if you're going to create a new business line altogether by using a demerger or a slump sale model, then it will still be a violation of conditions. So be very careful on that as an understanding of. Clear with me? Yes, good. Let's take this forward a little bit more and let's understand a few things. First, I came and told you that when it comes to this company, you need to be a manufacturing company. If you do anything other than manufacturing, you are violating the conditions, and the moment you violate the conditions, you will not be eligible for BAB, but you can still move to BAA. If not, you can go back to old regimes. Yes, but you can never come back. Yes, once you have dropped, you have already gone. Clear, not clear? Yes. Now, a couple of questions I'm going to ask. A very simple example. Imagine I am running a factory. Manufacturing is going on in this factory. Yes, in this factory manufacturing, ground floor was not being used properly. There was a lot of open space. So what I decided, I will give it away on rent. And now I am receiving rent from my factory. Tell me, head taxable under. Very good. going to be taxable under IFHP. Tell me people, now I'm receiving rent from my factory premises. Rent from my factory premises. Tell me, will I violate the conditions or am I still eligible for the conditions? Am I going to end up violating the conditions or am I still eligible for the conditions? Because it says you're not supposed to do anything other than manufacturing. You're not supposed to do anything other than manufacturing. Now that you're renting your factory premises, tell me, are you violating the conditions or are you still satisfying the conditions? Why? How is it incidental? Very good. People, read the lines carefully. It says the company should not be engaged in any business other than manufacturing business. This is not my business activity. This is my incidental activities. Yes, if you think on those lines, any company will have extra cash, will try to put it in FD, gain interest. Can you stop them? Can you come and say, no, going forward, you should never earn interest? Definitely not possible, because that is not my business, which means in my business operations, I should not be doing anything other than manufacturing. But other than business activities, I can do anything. Agreed, not agreed? Yes. Now I wanted to think on those lines. People, I was telling you an example yesterday where basically what happened is there was a company called Reliance Holdings, and now this company has created a Reliance subsidiary. This Reliance subsidiary is in manufacturing, therefore you're giving a benefit of 15%. Giving a benefit of 15%. Agreed, not agreed? Yes. Scenario was like this. Basically what happened is Reliance Holdings was having some shares in his hand on which they were getting dividends, taxable under IFOS, Now people, Reliance Holdings has been there for 50 years, which means either it can opt for BAA or it can go for old regimes. If it goes for old regimes, tax rate is 30%. Hey, Reliance Holdings is a company. Yes, more than 400 crores, tax rate is 30%. Or if it goes for BAA, tax rate becomes 25.168. Now what has happened to this people? My shares which I am receiving dividend on, Reliance Holdings is receiving this dividend and is taxing it at 25.168%. Yes. Now Reliance Holdings is thinking, boss, why should I be taxing this as 25? I have another entity which is paying tax at 17%. So what Reliance Holding did? Reliance Holding transferred the shares to Reliance subsidiary. Who's holding the shares now? Reliance subsidiary. Tell me, violation of condition. Any violation of condition? No, because what am I transferring? Shares. It's not a plant and machinery. Any violation of conditions? No. Who's the owner of the shares? Reliance subsidiaries now. Who's the owner of the shares? Reliance subsidiaries. Who's receiving dividend? Reliance subsidiaries. Correct. No. Who's receiving dividend? Reliance subsidiaries. If Reliance subsidiary is receiving dividend, the dividend will be taxable in the hands of Reliance subsidiary under the head IFOS, taxable at the rate of 17.16. Correct, not correct? Taxable at the rate of 17.16, which means now if you think about it, even though I was not able to save any tax on my existing manufacturing, I can pass on all my incidental incomes. To my subsidiary and make it at lower tax. Group level, my tax saved. Good scheme, bad scheme. You think income tax is stupid? People, why am I giving you the 17% benefit? Because you're going to do manufacturing. Is this relating to your manufacturing? Any work related? No. Income tax came and clarified saying, boss, the rates which I've given to you is only for if you're doing manufacturing activities. Which means income tax now came and clarified that if you're getting any income which is not related to what? To your manufacturing. If you're getting any income which is not related to your manufacturing, can I be taxing this as 17.16? Can I be taxing it at 17.16? No. Income tax said, boss, then there is nothing to do with 17.16. Go back to the normal rates. What is the normal rates? I can opt for BAA. My normal rate becomes 25.168. Correct, not correct? Yes, income tax said you will then start taxing this as 22% plus 10% surcharge plus 4% cess, which means this now becomes 25.168. So what is the benefit income tax came up with, people? Income tax came up with saying, boss, I can only give you this manufacturing as an operations for my manufacturing related businesses. If it is not going to be related to my manufacturing, it is going at the 115 BAA rate, which is 25.168. Makes sense? Makes sense? Any doubts on this part? No? People, challenge is started here. Challenge is started here. Income tax rate, I will tax it at 25.168. That's fine for you. That's fine for you. But this will be without any no guess? No guess? This is without any expense or deductions. Yes, an undue advantage has been taken by income tax now, where income tax says when I'm going to tax this, I'm going to tax it without giving you any kind of expense and deduction, which is kind of unfair if you ask me, because had I gone for BAA, you would have given me 25.168 after all expenses. But here is a case where income tax says no, you're in manufacturing. I brought you into existence only for the purpose of manufacturing. Doing anything incidental is not your core activities. Therefore, you would have to tax it at 25.168 without any expenses or deductions. Now, if you think about it, people, Reliance's subsidiaries is now getting, let's say, rent from factory. You're going to tax it under HP. People had holdings, holdings would have got 30% standard deduction. Holdings could have claimed municipal tax as a deduction. All those expenses would have been given to you. Now that you transferred it to your subsidiary, you will get nothing. Revenue becomes taxable flat at 25.168%. Becomes flat to tax at 25.168, which means doing incidental incomes in your 115 BAB company is a good thing or a bad thing? It's a bad thing. You're not getting any expenses. And when I say any, I literally mean any expenses. Nothing will be allowed to you as a deduction of. Yes, which is one clarification from ICI saying when you see a 115 BAB company, what do you see? When you see a 115 BAB company, look out for what we call as IFOS and HP. Look out for what is called as IFOS and HP, because anything being sitting under IFOS and HP will now become taxable at 25.168 without any expenses. Agreed? Although people, I don't completely agree to this. Yes, let me tell you why. 115 BAB does not come and talk about IFOS and HP. It simply says any income not relating to your manufacturing or incidental to your manufacturing. Think about this carefully. My factory building was used for my manufacturing. I had some extra space, so I gave it away. At the end of the day, the building is relating to my manufacturing, and the person to whom I'm giving also will use it for manufacturing. Yes or no? So while it may not be my manufacturing, I'm still supporting someone's manufacturing, which means it is relating to my manufacturing operations. Agreed? Not agreed? So should I be taxing it at this rate? No. Which is why people in the market, you can make a defense point to say even if something is under HP or IFOS, I can still ask for 17.16. But here is ICI coming and saying that's too complicated for me to understand. And therefore, ICI has made a comment saying that anything sitting under IFOS and HP will directly go to 22% plus 10% plus 4% surcharge. Are we making sense? Yes or no? Yes. So this is what the new tax rate is. Any doubts on this? All clear? Yes. Last question. People, I have shares now. Who am I? Subsidiary. I'm going to sell these shares receiving CG. I'm going to sell the shares receiving CG. People, CG should be taxable at CG rates, or should be taxable at this rates, sir? Should be taxable at CG rates or this rates, sir? Always the normal special rates are going to be applicable. Whether you are going in BAA or you're going in BAB, the rates are going to remain the same. Nothing is going to change in the rates. Yes or no? Yes. So which means if you have any kind of income, taxable as per special rates, you will continue to do the same special rates. Agreed? This is what the comment came in from income tax department. Any doubts on this part? Yes. So if I have to summarize this whole definition, people, 115 BAB comes and says any manufacturing related activities goes for helper. Any manufacturing related activities goes for 17.16. Any unreasonable profits goes for 30% plus 10 plus 4. Any kind of activities not relating to manufacturing goes for 25.168 without any expenses, and any special incomes goes for special rates, Any doubts on this part? Yes. Now people, I have a peculiar issue. Let me put out my heads of income. Help me out. A company can earn what heads of income? A company can earn income from house property. What is the rate we confirm? 25 point, without any expense. Next head, we have PGBP. Yes. Now people, PGBP can be of two types. Type number one. No. How will you do speculative and all here? If you do speculative, you're violating conditions. Can you do speculative? People, the moment it hits speculative, it becomes PGBP income. And in PGBP, I can only do manufacturing. Can you touch speculative here? No. You touch speculative, your answer is gone. You can't touch it. Two incomes which I'll have, normal, and one is TP adjustments. Normal and TP adjustments. People, if I'm going to have normal PGBP income allowed for my operations, tax rate 17.16, agreed. Yes. If I'm going to do a TP adjustment, tax rate will become number 34 nahi aayega, 34.32. Agreed. I am now going to the next head. Next head is CG. Now people, for those who remember CG are of four types. CG are of four types. Help. 1-1, 2A, 1-1, 1-1, 1A, and we have others. Yes. Now if you think about this carefully, people, what and all is defined in special rules? 1-1, 2A is defined. Tax rate is 12.5 in excess of 1.25 lakhs. Correct? No. Yes. 1-1, 2. 12.5. 1-1, 1A. Very good. 20%. I am stuck on others. Help. People, STCG others will go for what rate? Yarra company ke slab kudupaan. Why? Does not? Okay. Hey, I have a factory building. I have sold the factory building. Tell me. STCG others. Tax rate at. Why? Is it? Very good. People, if I had two buildings and I sold one of the buildings, what you would have done? You would have put it under CG or you would have gone to PGBP? Think about this carefully. I had two buildings, depreciable asset. One of the buildings I sold off. Sale value will be reduced from my block of asset. If I'm reducing it from my block of asset, my depreciation is coming down, which means you had technically given me tax at 17. You had given me tax at 17. Why? Because it was part of PGBP statement. Hello. Yes. Apo, can you give me a confirmation saying STCG others are only relating to non-manufacturing operations? If the building was part of business, I would have done it 17.16. Just because you have sold the whole block, does it mean that you will not tax it that way? No, obviously not. Yes or no? Which means STCG others can be of two types. One, relating to business. One, not relating to business. Agreed? No. Yes or no? People, what is relating to business? Obviously the operations which are manufacturing in nature. For that I should be giving you 17.16. Agreed? Not agreed? Yes. So you have to clarify this, people. I can do it this way. When it comes to others can be of three assets. One is called depreciable asset. Depreciable asset was used for my manufacturing business. So whatever gains I get from this should also be taxable at manufacturing rates, which means this will go for 17.16%. Correct? No. Yes or no? Any doubts on this part? Clear with me to go? Yes. I am now having non-depreciable assets like Like land I have in my hand, yes, I'm using for my manufacturing, but at the end of the day, when I'm selling the land, it was with an intention to run my business or intention to make profits. Intention to make profits. Can I give you 17 percentage? Can I give you 17 percentage? No. Income tax is taxable at 25.168. 25.168. Any doubts on this part? Are we making sense? Yes. Problem comes when I have something else called investments. I have something called investments. For example, I have sold some private shares. I've sold some private company shares. People, will it go under 112A? 111A? It'll sit in STCG others. It'll sit in STCG others. Tell me tax rate. 25.168 percentage. Same thing. 25.168 percentage will be my tax rate. Agreed, not agreed? Yes. Now there is only one question, people. Question is that non-depreciable asset of land, did I use for my business? Not use for my business. I used. Yes, I'm not making any profits out of it, but did I use for my business? I did use it for my business. Upper question is, when you tax 25.168, the next one I'm going to say no expense, no doubts. For this land part, the non-depreciable asset, can I claim expenses? Not claim expenses. Can I claim expenses? Not claim expenses. It's a yes or no question. No. Yes or no? Yes or no? Yes or no? Good question. Good question. Yes. Let's see what the law says. Let's see what the law says. If you can check your concept books, people. You can check your concept books. Page number 15. Page number 15. Read the line before. Read the line before. It says STCG on transfer of capital assets on which no depreciation is allowable. On which no depreciation is allowable. Income tax confirmed a tax rate of 22 plus 10 plus 4. Look at the next line. Next line says incomes which are neither derived nor incidental to manufacturing, production or other operations will be taxable at the same 25.168. But do you see an asterisk mark? Do you see an asterisk mark? Asterisk mark is there on the last line, which says any incomes under this head will be taxable on gross basis. Do you see the same asterisk mark in STCG? The idea is very simple, people. Here they are saying, yes, I will tax at 25.168, but it was used for my business operations, which means you can claim your expenses. You can claim your expenses. Are we making sense? Are we making sense? Yes. Which means here is where you have to be extremely careful in exam, people, that when it comes to normal investments, the answer is no expenses. But when it comes to non-depreciable answer, the answer is with expense. The answer is with expense. Are we making sense? Yes. Now, I don't know, people, how to interpret this. To be very honest to you, I'll be very honest to you. I don't know how to interpret this because there is a big issue going on. If you read this line carefully for me once again, yes, what does the line come and say? Any kind of STCG on which no depreciable is allowable under the Act. Now, I know land is not allowable for depreciation, so therefore I did 25.168 with expense. With expense. When it comes to shares, private company shares and all those things, are you claiming depreciation? Are you claiming depreciation? No, you're not claiming depreciation. Yes or no? Yes. Apo, you can make two line of defense. Line of defense number one, you can say depreciation is not claimable. So that also goes for 25.168 without any expense. Correct. Line of defense number two, there is a difference between saying not allowable and not even there. Shares were never allowed for depreciation. Yes or no? So you can say a defense line to say there is difference between not allowing depreciation and not having depreciation itself. When a share does not even have depreciation, that does not fall here. It automatically falls on the bottom. It falls on the bottom, which means you will then do 25.168 without expenses. Without expenses. Nothing will be given to you. Yes, they will take away everything out of you. No cost of acquisition also given to you, which means now when it comes to STCG others, you need to make a choice as to what is your line of defense. Your line of defense could come and say depreciation is not allowable on shares, therefore it is 25.168 with expense as per the top line. Or you can say not allowable is different from not having it itself. in which case it will be 25.168 without expenses. Without expenses. Agreed, not agreed? Yes, this is a line of question which is going on right now, people. I have no answer on this. I have no answer on this. We have not been able to comment on it. What I have understood from the market practices, people are telling this line is not applicable for capital gains itself. This line is not applicable for capital gains, which means the capital gains, even if it is like shares, will go for 25.168 with expenses. Will go for 25.168 with expenses. The reason is very simple. People took a line of defense to say their word is saying income, and shares lay whatever you transfer is not income, it is gains. It is gains, and therefore people are saying, boss, the gains word is not used. They have used the word income. Income means only revenue receipts. Income means only revenue receipts, and therefore they have told only HP and IFOS will be covered here. CG will not be covered here. CG can still claim expenses. CG can still claim expenses. Somehow ICI is agreeing to this also, because like I said, no, ICI, when they prepared the document sheet, your study material for this line directly writes in brackets HP and IFOS, writes in bracket HP and IFOS, which means ICI also thinks that if it's STCG, like shares also, still it is eligible for expenses. Still it is eligible for expenses. Are we making sense? Yes. So we are going to follow that same logic for now, people. We are going to follow the same logic for now, although I wanted to give it out to you. Yes, which means I am not going to talk about investments anymore. I'm going to tell any depreciable asset goes for 17.16 and every other asset goes for 25.168, but this time allowed expense. This time I will allow expense. This time I will allow expense. Any doubts on this part? Are we clear? That leaves me with the last one, people. When it comes to last head of income, last head of income is called IFOS. IFOS rates are 25.168, but this one is without expense. Without expense. Now I'm also clarifying this right now, people. When you say IFOS can have other things also. You can have winnings and stuff. If you have winnings and stuff, then that goes for the normal slab incomes. I'm not discussing on those things, because yeah, winnings and all by a company looks very wrong. Yes, so you can't have those kind of scenarios happening up. Maybe VDA transfers. If you have VDA transfers, then that goes for 30%. That is how the rates are. Are we clear? Yes. So this is what my summary of how the tax rates should look like. So if I have to, I can, yes. This is how my summary of tax rates look like. Any doubts on this tax rate summary? Good to go? Yes, can you note it down quickly for yourself? People, does anyone have any doubts on this? Sure? Yes? Good. If you have a sticky note, you can just put it in the sticky note and stick it in your concept guide itself. If you think it's too lengthy, then you can write it in your notes. मेरी हैंडराइटिंग अच्छी नहीं आ रही. Yes, the summary should help you prepare for your exams better rather than reading the table. The table may be nice, but it still is a little confusing. Yes, a chart format always helps you prepare for exams a lot better. Please make sure to highlight this STCG part carefully. Yeah, yes, yes, very good. This is all your tax rates when it comes to 115 BAB people. When it comes to 115 BAB, normally expectation in exams, you'll get it as a part of a compulsory question. Yes, which means 115 BAB is not the only thing you need to know. You need to know how to make your total income adjustment also. Yes, you'll be given a full-fledged question of 15 marks where they'll ask you how to prepare your total income statement. And using the total income statement, you should be able to use these tax rates to get your final answers of. Yes, which means 115 BAB is one of the more lengthier questions in exam. If it comes, it will take a lot of time and efforts. Yes, it'll take a lot of time and efforts for you to get through it, but nevertheless, this is how the tax rate computation is. Yes, as compared to this 115 BAA looks a lot easier because every bloody thing is 25.168 except for your special incomes. Yes, so you can use that as a defense point and you can proceed forward. But yeah, if you're choosing to opt for this income, it's a very complicated one. You have to identify every head of income individually and prepare your answers accordingly. Are we clear? Yes. Now, before we proceed forward, let me clarify this one thing. When you see this TP adjustment, when you see this TP adjustment, I'm not sure how many of you have done it practically, people. TP adjustment normally works in the reverse order. TP adjustment is a case where I would like to offer more income. TP adjustment is a case where I would like to offer more income. Very simple, people. TP adjustment works in a fashion like, for example, I have come and sold you goods. I have sold you goods worth 1 crore, which I should have sold for 1.5 crores. Here is where income tax department will come and say, you have sold for a lower price. Because of which department will increase my income by 50 lakhs. Department will increase my income by 50 lakhs and therefore that TP adjustment happens. Here is not that case, people. Here I am itself ready to offer 1.5 crores. Think about this carefully, because here I am trying to reduce my tax or increase my tax. I'm trying to reduce my tax. The more I show as income, the more the other party claims an expense. Correct? So which means here is a case where I am itself reporting 1.5 crores. And government will say you should have only reported 1 crore. Because you have reported higher, that extra 50 lakhs is an income for you, but 30%. But 30%. I hope you understand this carefully. Yes, I'm repeating myself once again. Look at it very carefully. Here is a case one where I have reported 1 crore. I'm a normal company. I have reported 1 crore, whereas I should have reported 1.5 crores. Government will come and question me saying, why have you reported lower income? He will add an extra 50 lakhs. He'll add an extra 50 lakhs. But when I am a special company, 115 BAB company, I will already report 1.5 crores. Here is government coming and saying, why are you reporting 1.5 where you should have reported 1 crore? The extra 50 lakhs which you're reporting is only to lower tax rate, and therefore I would tax at 17.16. So this is exactly opposite of what TP looks like. In TP, you will be adding more income. In here, you will keep the income but tax it at higher rate. So please don't get confused here, people. When I say TP adjustment, you will never see a question in exam where they will increase your income. The exam question will simply come and say the transaction has taken place, is already in your P&L. You will say do nothing except for tax at higher rate, which means don't inflate your incomes. Simply tax it at higher rates. Are we making sense? Yes. TP adjustment normally in a practical world, persons like to show lower income in India. Here is a case where person is trying to show higher incomes in India. That's where the whole challenge starts. That's where the whole challenge starts. Are we making sense? Are you clear on this part? Any doubts on this? Yes, so be very careful when you read TP adjustment, people. This is not exact TP adjustment, this is reversal TP adjustment. Here is me showing higher incomes. Are we clear? Yes, good. Perfect. With this, we are done with what is called as BAA and BAB, people. Just to see if you are comfortable on this, let's look at some questions from your question bank. Let's look at some questions from your question bank and let's see if you're able to answer it off. Yes, in your question bank, what we're going to do is I'm going to ignore question number 1 and all. These are your study material questions, not relevant to tax rates, more relevant to your income statement. We are yet to discuss the income statement, so I'm ignoring it off. For your convenience, I have prepared some questions from my side. Yes, so we're going to look at those questions and see if you're able to answer the questions from that perspective. Let me see which question is that. Yes. Yes, so I have designed some questions for you. Let's read the question together. Let's see what is the right answer. Question number 1. It says, Jerry Limited is a domestic company who is incorporated on 22nd October 2023. People, incorporation is between 19 to 24, which means eligible for BA. Very good. Is engaged in the business of manufacture of cheese. Very good. People, the person is doing manufacturing, which means eligible for BAB. The company purchased new plant and machinery aggregating to 45 crores, all which has been put to use before 31st March 2026. Your previous year, all the assets have been put to use. Jerry Limited also entered into an agreement with Nibbles Limited, another domestic company, to purchase all the machinery in the cheese production of Nibbles Limited for a total value of 15 crores. Hey, I already had 45 crores worth of assets purchased. I have gone to another company and said, give me your assets worth 15 crores, which means these are all second hand machineries. These are all, you can't buy more than 20%. Now tell me, people, 20% of what? Total assets matlab 45, 15, 60. 45, 15 or 60? 60, it's always 60. Yes, it's 20% of my total assets. 45 plus 15 will become 60. 60 ka 20% is 12. 60 ka 20% is 12, which means you are maximum allowed to buy 12 crores in second hand. You have violated conditions. Let's read further. The net profit for the year ended as 36 lakhs. Jerry opted for concessional tax regime of 115 BAB and has computed tax at 17.16. However, the assessing officer passed the order contending that Jerry Limited has violated the conditions and hence computed tax at 30% plus applicable cess of 4% as per normal rules. He said, boss, you are not eligible for 115 BAB, therefore you have to go for old rules. The AO also mentioned that Jerry will not be eligible to opt in into any concessional tax regime for 26-27 and for all subsequent years. Officer says, you have violated condition. I am very unhappy with you. You are going forward forever going to be in 30 plus 10, 30 plus 4%. 30 plus 4% is what the officer has come and confirmed to you. Discuss the validity of the contentions of the assessing officer. Is the AO correct? First, what and all has AO done? AO has reversed the 17.16 and taxed it at 30 plus 4. Is he right to do that? He is right to do that. People, unfortunately, you have violated the condition. Yes, I don't deny that you can go for 115 BAA, but to go for 115 BAA, you have to file a form. Did you file the form? No. When will you? You are in assessment. Meaning this year has to go for 30 only. Can't help it. And next year you can file the form. Correct? Not correct? Apo this year officer will tax at 30% only. Can you avoid it? Cannot avoid it, which means to the extent of the current year data, the information is correct. You are not eligible for 115 BAB. You should be going for normal rules. But officer saying you cannot go for any subsequent years. Is he correct? He has to give you the permission to go for BA. Correct? Not correct? Yes. So he will be wrong to that extent. Which means this answer is partially correct. Are we making sense? Yes. Let's read the answer. It says, as per section 115 BAB, in case of a domestic company exercising the option of 115 BAB, the income tax payable in respect of the total income will be at the rate of 15% if all the conditions are satisfied. Under the provisions of subsection 2, a company shall be eligible to opt for 115 BAB if it does not use any plant and machinery previously used in India exceeding 20% of the total assets. In the present case, it is stated that the machinery purchased from Nibbles relating to cheese production unit, it is logical to assume that Nibbles has already put to use such machinery. Hence, machinery worth 15 lakhs will be treated as previously used assets in the hands of Jerry Limited. Total value of machinery is 60 lakhs. 25% is what is 15 lakhs. 15 crores is what is 15 crores, which is violating the conditions. Further, under the provisions of 115 BAB, where a company fails to satisfy the conditions, the option will become invalid and all the provisions otherwise will apply as if the option was not exercised for the same year as well as all subsequent years, which means the moment you have violated the condition, you cannot claim 115 BAB. However, as per the first proviso of 115 BAA, where an option exercised under BAB is rendered invalid due to violation of condition, such person may exercise the option of 115 BAA. Yes or no? Yes. Accordingly, the contention of AO is right to the extent that Jerry has violated the conditions and hence will not be eligible for 26, 27 and all subsequent years. However, the contention that he will not be eligible to opt for any concessional regime is invalid, as Jerry can continue to be eligible to exercise the option of BAA and tax at the rate of 22%. And tax at the rate of 22%. Yes or no? Yes. So what is the conclusion of this question, people? The conclusion is yes, you have violated condition. Yes, you can't claim 115 BAB, but you can still claim BAA. You can still claim BAA. Yes or no? Yes. Now this is my draft answer, people. Look at the template format. No, what and all have I done? I first wrote the provision. I wrote BAB and the whole provision up to 20%. Then from here I wrote facts of the case. From here I wrote the facts of the case. Then came in my analysis here. And then I gave my conclusion here by accordingly, which means a 4-mark question needs 4 paras to conclude your answer accordingly. Yes. So if I have to prepare an answer, what will I say? As per 115 BAB, this is what the conditions are. In my present case, this is what has happened. Based on all that understanding, this is what has concluded, and therefore to this extent you are right, to the balance extent you are wrong. Are we clear? Yes. And see how carefully I've used my words, people. I've never used the answer saying AO is wrong, or I've not used the word that AO is correct. I've used the word saying contention is valid or contention is invalid. Contention is valid and contention is invalid. It's all about writing the proper English. Yes. The more heavy English you write, the better for your examinations. Again, at the same time, don't go Shakespeare level. Yes. Because the person correcting your paper knows absolutely nothing. You try too much English, he will also not understand. He will strike off the whole thing. Yes, you don't want to overtouch his ego also, but at the same time you want to convince him that you are ready to pass. Are we clear? Yes, this is what the conclusion is. Meaning? Jerry also entered into an agreement with Nibbles Limited and the company to purchase all the assets of Nibbles Limited for a total value of 15 crores. Either case, the conditions are getting violated, right? Not this year, maybe next year will get violated, right? You can use that as a defense point also. Yes, definitely. People, the condition says the assets should not be used. Here, there is only an agreement to purchase. They have not confirmed about the usage, which means you can make an assumption that usage was never taken place in the current year, which means it will be a violation from next year. It can be a violation of next year. Although in a company model, people, when you have purchased a business, it's logical enough to assume that in the current year, no, which means the assets have been transferred to you. Have you become the legal owner of the business? If you become a legal owner, practically, if you come and ask me, if a legal owner you have become, why would you not keep an asset in your hand? It's a used asset already, which means production is going on. Will you stop a production then? Yes. So to that extent, yes, you're right, but it's too technical for you to make an assumption to that extent. Splitting up or reconstruction?
Before 31st March 2024.
No, that's okay. So the question you are asking is, there is a condition which says the asset should be put to use before 31st March 24. No, that's not the case. The question says the assessee should have started his business before 31st March 24. It's not for the assets. The assets, I have already commenced manufacturing for 45 crores, no? My business has already been going on from where? 23, which means from 23 I was already running manufacturing. It's just that I purchased extra assets in the current year. Right? It's not coming and saying that you should not buy assets after 31st March 24 itself. It just says that your production should have started in 31st March 24. Obviously, when the business was incorporated in 23, you would have started your business that time, which means the business would have already commenced off. Correct? What you're acquiring right now is only additional assets for additional businesses, not for your existing ones. Clear? Yes, yes, good. Look at the second part of the question, people. It says, would your answer be different if Nibbles is a US based company and the assets were purchased from US? And the assets were purchased from US. Now, people in income tax, everywhere where the 20% condition is there, income tax has come and clarified saying 20% only refers to those assets which are used in India, There is only one case where it is not so. Any guesses? There is only one section where they talk about 20%, but they say you should not use assets outside India case also. $35? It's an additional depreciation. In additional depreciation, it has been confirmed saying when you are gaining an additional depreciation, you are not eligible to claim additional depreciation even on assets used outside India, which means an asset brought from outside India is also not eligible for additional depreciation. In the whole income tax, every place says when you buy a machinery from outside India, whether it is used or not used, it is always assumed new for India. There is only one exception, which is additional depreciation, where they say outside India assets are also not eligible for additional depreciation. On that facts, people, assets are imported from US, which means for India, these assets are new machineries. The moment they are new machineries, my 45 is also new, my 15 is also new, everything is new. I have no violations. There is only one thing to be kept in mind. When you're importing machinery, you can make a defense to say that this is a splitting up or reconstruction of existing business. Yes, because Nibbles is selling off his business. And giving away the assets to you. So you can make a defense that to that extent an assessing officer can question you. But if that condition is not violated, then you are satisfying all the conditions. Are we clear? Yes. Although in this case it is very remote to happen because it's a foreign company. A foreign company cannot give away your foreign business to India. Yes or no? You're importing the machineries, which means technically all assets are going to be used in India. So all you can buy is machinery. You can't buy is business. Yes or no? So to that extent, the condition will not get violated and the conditions will remain satisfied, which means you are eligible to claim 115B, A, B. Are we clear? Yes. Let's read it. What does it say? Yes. As per explanation 1 to subclause 2 of subsection 2. People see how they've written it. As per explanation 1 to subclause 2 to subsection 2. बीच में clause miss हो रहा है. Any machinery or plant which has been used outside India by any person shall not be regarded as machinery which is used in India for any purpose. If the following conditions are satisfied. Such machinery was not at any time previous to the date of installation used in India. Such machinery is imported into India from a country outside India, and no deduction on account of depreciation of these machineries have been allowed in India. Basically, should have not used this asset any time in India for any purposes. In case Nibbles is assumed to be a US company, all assets are imported from US. It shall be deemed that the machineries are purchased were not previously used from any purpose in India. Hence, Jerry Limited is eligible to claim 115 BAB. Is eligible to claim 115 BAB. Are we clear? Yes. So the more of your understanding. Any doubts? Good to go. Yes. Let's read a heavy question. Are we ready? Yes. Good. People, question number 2 is something which we're going to hold back because question number 2 is a computational total income question. I am looking at question number 3. Let's see question number 3. 3 says Santa Limited is incorporated on 25th October 2023. People, before 24, eligible for BAB, is a wholly owned subsidiary of Banta Limited and is engaged in the business of manufacture of automobile engines, which means I am a manufacturing business. It furnishes you the following information. First, they gave you net profit of 26 lakhs. People, net profit of 26 lakhs taxable at 17.16%. Correct? Yes. However, read the line 2. It says included in the above net profit is a profit from sale of 500 engines to Happy Limited, another wholly owned subsidiary, at a price of 30,000 per engine, whereas the normal selling price is only 28,000. I have sold it to him for 30,000. I should have sold it to him for 28,000. I am trying to report more profits. If I try to report more profits from a closely connected person, the additional profit will become taxable at 34. Acha, here 24 will be taxable at 34.32%. Tell me what is the number? 10 lakhs. 2000 into 500 engines. Zeros गिन लो, 6 आएंगे. 6 आ गया. R0. Oh, tax के point, yeah. Yes, so this is going to be for 10 lakhs. This is going to be for 10 lakhs, and this 10 lakhs is going to be taxable at the rate of 30%. Yes, whereas in this 26 lakhs, what will I do? I will now only tax 16 lakhs at 17.16%. Correct, not correct? Yes, because the 26 lakhs, 10 lakhs is already included. I don't want that inclusion. So I remove that 10 lakhs, 16 becomes taxable at 17.16%. Correct? Yes, good. Move forward. It says, during the year, Santa has received the following assets from Banta. Who's Banta? Who's Banta? Parent company. Parent company. Now, people, I don't know how many of you are aware about it. Capital gains has a specific exemption. Section 47 comes and clarifies that when a parent sends anything to its subsidiary, which is a wholly owned subsidiary in India, all transfers will be exempt. All transfers will be exempt, will not be taxable in the hands of subsidiary. Also, the cost of acquisition of the subsidiary will be cost to the holding. The period of holding of subsidiary will become period of holding of parent. Yes, all cases will that operate. Yes, so section 47 will come into picture. Because I'm transferring anything from my parent to subsidiary, whole transaction is exempt. Are we clear? Yes, let's read it carefully. It says, Santa is receiving the following assets from Banta Limited. I have received units of equity oriented mutual funds. Kya hai ye? 112A or 11. People, equity oriented mutual funds is nothing but equity mutual funds. Equity mutual funds meaning share market incomes. Share market indale 23, 24, 112A or 111A. People vended Banta by 23, 24. My period of holding will start from his period. 23, 24 he bought. I am in 25, 26. Which means period of holding is more than 12 months. Very good. Period of holding is more than 12 months, which means this is 11. Very good. It is section 112A. It is section 112A. Next, we have something called as debt-oriented mutual funds. Debt-oriented mutual funds. People, can debt-oriented mutual funds be considered as a 112A or 111A case? No, it cannot be. It cannot be considered as 112A or 111A case. It will go as 112 or others. 112 or others. Purchase year 2021, which means long term. Therefore, this becomes 112. It becomes 112. Now, I want to clarify this before I proceed forward, people. Last year, there was an amendment. For those who know, there was an amendment last year where it said a market linked debenture or an unlisted bonds and debentures have now been confirmed to be only short term despite your period of holdings. Which means from last year, any unlisted debentures, any market linked debentures will always be considered short term irrespective of your period of holding. However, the provisions clarify that it is only for assets which are issued after 23rd July. For assets which are issued after 23rd July, which means if you've issued it after 23rd July, it is always short term. This is an asset which was purchased in 2021, which is issued before 23rd July, which means you will be eligible to claim long-term benefits. Are we clear? Yes. Now, I have purposely, for my convenience, people taken out the cost of acquisition because meko nahi pata. I have no idea whether expenses are allowed or not allowed, so I did not take that risk itself. Meko nahi pata. I'm making it very open to you right now itself. Yes. If I put an expense there, should I claim it or should I not claim it is something I am not sure, because I told you this is STCG others or LTCG others. If it is STCG others, it becomes a problem for me, so I didn't want to take a chance. Are we clear? Yes. Next, it says vacant land purchase price is 7.2 lakhs purchased in 25-26 in this year, which means short term asset, short term with section short-term others, and short-term others comes and clarifies when an asset on which you can't claim depreciation, tax rate becomes 25.168 with or without, with the expense. Very good. So this is going to be STCG others with the expense. With expense. So can I claim the 7.2? Yes, I can claim my 7.2. Next, WDV of furniture and fixtures which are purchased on 1st April 2025. People, this is my opening WDV. This is my opening WDV. Now this is for what? Furnitures and fixtures. Do I have any violation happening? Why? Only plant and machinery has a problem. I have not bought any plant and machinery from, which means I am satisfying all conditions. This has been bought in 1920. People, asset will be short term, long term. Huh? Asset will be short term, long term. Hey, 1920 case, short term, long term. This is short term. Depreciable assets are always short term capital gains. Depreciable assets are always short term capital gains. Your period of holding does not matter. Your period of holding does not matter when it's a depreciable asset. Depreciable assets are always short term capital gain. This also goes as STCG others. This also goes as STCG others. But people, this is a depreciable asset used for my business, liable for 17.16. I can claim the whole normal benefit rules because this is a manufacturing business. This is a manufacturing business. Agreed. Agreed. Next, I have bought factory building. People, factory building is violating conditions. No, again it's a building purchased in 1819. Purchased in 1819. People, if it's purchased in 1819, this is a maybe a long term, maybe a short term, depending on whether you have claimed depreciation or not. Depending on whether you have claimed depreciation or not. If you have claimed depreciation, it becomes short term. If not, it is a long term. It's a long term. I don't know what we have done. Let's hold it back. Let's hold it back. Yes or no? Yes. Now, I don't think we are selling it off itself. So therefore, there is no problem here. Yes. Question number 4 says a portion of the building was let out at a rent of 35,000 per month for the period November to March 26. I have let out my building. I have let out my building. Municipal taxes paid for the building is 13,000 rupees. People, taxable under IFHP. I am the owner of the building, which means taxable under IFHP. Can I claim municipal taxes? No. Taxable at the rate of 25.168 on a gross level. On a gross level, no claim for expense. No claim for expense. Correct? Not correct? Yes or no? Very good. Next. Land received from Banta Limited was let out for a lease for a period of November 25 to Feb 26 for 20,000 rupees per month. Land leveling charges is 15,000 incurred for the land was let out. Leveling charges has not given rise to any economic benefits. What does this mean? It's a revenue expense. When it does not increase any future economic benefits, it becomes a revenue expense. And this land was subsequently sold in March for 9.3 lakhs. Expenses incurred is 0.2, which means this land is now done for two things. One, it is let out, and later on it was sold off. People, to the extent the land was let out, I have received rent taxable under IF. Wow. Why? Let out. There is no building. Very good. People, HP means land with the building. Land with the building. There is no building here. It's a vacant land, which means goes under IFOS. Goes under IFOS at the rate of 25.168 with expense, without expense. Without expense. Land leveling charges are going to be ignored. Agreed? Yes. Next, last, it says the following assets from the Banta were sold in the year, which means these are the assets which I'm going to sell. Only these I'll have capital gains. Only these I'll have capital gains. First one says equity oriented funds taxable at 112A. Debt oriented funds taxable at 112. Furnitures and fixtures taxable at short term gains. STCG others depreciable asset concept, which means 17.16. Land is sold here. I've also sold the land of here. What else is pending? What have I not sold? I have not sold my building off. I have not sold my people. When I am designing the question, I'll make it smart only. No. Yes, this is what the question says. Question says compute tax liability, assuming the person is opting for 115 BAB. This is what the question is. Any doubts on the question? Can you solve it for me? Yes, help karo. Question number 3, I think. Yes, section C, question 3. Section C, question 3. Now, people, I was telling you, every time we solve a question, I have a particular format of heading. You are going to follow the same heading format for all your questions. So, let me give out the heading to you and you can write it accordingly. Yes, heading is computation of. Heading is computation of. Hey, what is the question asking for? Tax liability. Always write the heading as it is. Computation of tax liability of. Whom am I asking this for? Santa. Yes, computation of tax liability of Santa Limited. Of Santa Limited for assessment year. You should not look at the board. You should know the answer. 20? For assessment year 26, 27. Yes. Now, for a company, people, there is only one thing to be noted after this, which is what is your regime. But when it comes to individuals, additional things you will be noting down. First, whether he is resident or not. Second, what is his age. Third, what is his regime. All the 3 things you're going to note down for an individual. Since we're doing only company, we don't have to write anything. So you can write under section 115 BAB. गंदा लग रहा है मेरा हैंडराइटिंग. मेरे पास नहीं है, पीछे है. Yes, go forward. Computation of tax liability of Santa Limited for assessment year 26, 27 under section 115 BAP. Yes, now people, when it comes to this template, some things you have to keep in mind. How many columns to make? I always have a small rule, people, when it comes to income questions. You ask yourself a question, am I doing one head or am I doing multiple heads? If I'm doing one head, answer is particulars with 2 columns. If I'm doing multiple heads, it's particulars with 3 columns. But here is me doing tax liability. I don't need multiple lines. It is enough if you have particulars with 1 column. Only tax liability, right? Nothing much to be done. Yes. So go forward. Particulars with amounts. Particulars with amounts. Yes. Now, people, when it comes to exam, notice this very carefully. When it comes to tax liability, income statement, your sequence of heads are extremely important. You cannot switch it. Rahul, मेरे को PGBP करने में आसान लग रहा है. Let me do it first. No, not allowed. You have to do it in the same sequence pattern, which means always HP first, then goes to PGBP, then goes to CG, then goes to. Let's keep that in mind. Yes. So in particulars, row number 1 is IFHP. Row number 1 is IFHP. Can I use IFHP as a short form? Yes, you can definitely. कोई problem नहीं है. Yes, IFHP is a notified short form, people. There is no problem here. You can use 2 short forms, 3 short, in fact 4 short forms particularly. You have IFHP, PGBP, CG and IFOS. All these are notified short forms. The one thing you're not permitted to use is IFS. Yes, IFS is not a permitted short form. Income from salaries does not work as IFS. You can write it as salaries. That's perfectly fine enough. Yes or no? Yes. Help me, people. Before I start computing tax rate on HP, I need to first find its income. Help. What is my GAV? You have the question. I don't have it. How much did I let out for? I let it for 35,000 for a period of November to March. For a period of November to March. Yes, be very, very careful in exams, people. You have to be very careful with the dates. At least in direct tax, ICL loves to play with dates. Yes, they will screw your life around with dates. If you jump up and you say, Rahul, 35,000 into 12, gaya. It is not 35,000 into 12, it is 35,000 into 5. Number is 1,75,000. People, can I claim any municipal tax? No. You have to write it as empty, not allowable. नहीं मैं कर रहा हूँ. No mark for that. Yes, empty is not allowable. Answer becomes NAV. Answer becomes NAV 1,75,000. 1,75,000. Can I claim standard deduction? Can I claim standard deduction? No. People, we are at IFHP and IFOS flat 25.168 without any standard deductions, which means minus standard deduction. Again, within bracket, not allowable. Therefore, my income from house property is 1,75,000. My income from house property is 1,75,000. Taxable at the rate of people, you have to show surcharge and all separately. You can't do 25.168. It's 22. What is the point of writing a format? Number 30, 38,500. 38,500. You see the format? You see the format? Yes, people, I'm using your ICA study material answer sheet format only, so focus on it. Yes, I am not supposed to touch this column because that column is for marks. You can only use your particulars column and then you can use your amounts column accordingly. Yes, so this is the presentation which will be more cleaner for your examination purposes. Now, Rahul, can I write IFHP 1,75,000 directly do 22%? No, no. People, you will lose marks. You will lose marks. Understand? DT may be a sum paper, but DT is a combination. DT is a combination. It's not just about your answers, it's about your provisions. Yes, writing 1,75,000 at 22% may fetch you the 1 mark for the number, but will fetch you 0 marks for the provisions. Yes, because you and I both know we were allowed the expense. Had it not been a BAB company, we would have allowed the expense, which means we have to confirm to him that we cannot allow this expenses, and that carries marks. That carries marks. Are we making sense? Yes. So be careful on the format. Yes, it will take an additional 1 minute to do it, but as you keep practicing, the speed will improve, and that will come as a subconscious mind. Yes, but if you make that kind of small silly error in exam saying, Rahul, I'm lazy, I don't want to write it off, mark milne kya tension hai, trust me, 5 mark question, don't expect 1 also. 1 मिल जाए तो बहुत बड़ी बात है 5 मार्क के क्वेश्चन में. Yes, that is how big deal it is. People really look at it very seriously, because the problem with examiners are people, examiners who correct your DT papers don't know DT. The only thing they know is the suggested answers, and if the suggested answers is going to give you a page of 4, you are only going to write 1.5 sides, you think you're going to get marks for it. What is the examiner going to think? Boss, when ICA is asking this much in content, why is this guy writing so less? Yes or no? Now again, it's not about filling papers also, people, it's about keeping it smart. Yes, so don't be lazy to write answers, write it properly. That is what the simple intention is. Now this is not just for DT, for any paper for that matter. The only reason I'm making you write right now so that you understand how to write it in exams. Don't get too lazy about things. Are we clear? Yes, good. We are moving on to second one, which is PGBP. Which is PGBP. People, PGBP is 26 lakhs. True or false? False. PGBP hyphen normal profits. Hyphen normal profits. What is a normal profit? No. Normal profit is 26 lakh minus 10 lakhs. Have they given the 10 lakhs in the question anywhere? You're arriving it right. How can you write it as 16 lakhs? It is 26 lakh minus 16 lakhs. This will be taxable at taxable at 15%. Taxable at 15%. 16 ka 15 is 20. What? 2,40,000. How did 22 lakh 40? 2,40,000. Yes, next. What do we call it? You can't call it transfer pricing adjustment. Yes, transaction with who was the person? Whom did you do the transaction with? Sorry? Happy. Transaction with Happy Limited at more than reasonable profit. transaction with Happy Limited at more than reasonable profit. Number is 10 lakhs. Number is 10 lakhs. Taxable at very good, taxable at 30%. Number gives me 3 lakhs. Number gives me 3 lakhs. Next, what do I have? Head number 3. Head number 3 is CG. Head number 3 is CG. People, what and all did I sell? First, I sold a land. Yes. How much did I sell the land for? 9.3 lakhs. Yes. So what is the format, people, if you remember CG format? Full value of consideration. People, can I do it in a simple format? Let me do. How many assets have I sold? 4. Land, equity oriented, then debt oriented, and one more. Furniture. Yes, I'm going to put it like this itself. Land, equity oriented funds, debt oriented funds, and then furniture. Yes. नहीं, मैं लिख सकता हूँ. People, I am taking too much efforts writing on a tablet. You are writing it on a paper. Write it properly. मेरे दुख समझो बेटा. तुम्हें पास होना है, मेरा हो गया. Yes. Now I'm doing it this way, people, because the format is the same. I don't want to repeat the format again and again. Yes. So what is the format? Full value of consideration. Yes. Land ka 9.3 lakhs. Land is 9.3 lakhs. Equity oriented funds is 6.3 lakhs. Debt oriented fund is 3.9 lakhs. Furniture is 4 lakhs. Furniture is 4 lakhs. Yes, people, CG ka format. Less transfer expenses. Less transfer expenses. What is my transfer expenses? Do you have any? Yes, numbers are land के लिए 20,000. Land के लिए 20. It's there on the previous question. Yes, on the previous adjustment you have land के लिए 20. Next, equity का 30,000, 0.3. DOF is nothing. DOF is nothing. Furniture का 0.1. People, I'm very carefully putting them in brackets just to be sure that I should minus. Next in the format is, what do we call it? What do we call it? Net consideration. We call it net consideration. Number is 9.1 lakh, 6 lakhs, 3.9 lakhs, 3.9 lakhs. Yes, next in the format, cost of acquisition. Cost of acquisition. People, land was a long term, short term? Short term? Land was short term? Yes, cost of acquisition number is 7.2. Equity oriented funds 3 point. People question, can I claim indexation benefits? It's a long term asset, right? People, this is 112A. 112A was never eligible for indexation benefits. Yes, 112A was never eligible for indexation benefits, so it is 3.2. 3.2. Debt oriented funds 0. No expenses given to me. Furniture is 2.6. Furniture is 2.6. Correct? Yes. What am I going to get? I'm going to get my CG. My CG is 1.9. When you have sold it in the current year, you can't claim any more depreciations. Any depreciation applies only after the assets are existing in the block post March. Depreciation is never computed in the previous year, it's computed in the assessment year. So if you don't have the asset in the previous year, there is no computation of depreciation anymore. Two 2.8, 3.9, 1.3, 1.3. Correct? Yes, yes. People, nature of capital gains. First one is land is others. Land is others. EOF is 1, 2A. DOF is 1, 2. Furniture is others. Very good. Furniture is others. Yes. Now I am also putting the tax rate here itself. What is the tax percentage? For others it is first others. Land tax rate is 22. Land tax rate is 22. 112 is 12.5. 112 is 12.5. Others is furniture others is 15. People, furniture others is 15. This is a manufacturing asset. This is manufacturing asset, therefore 15%. Correct? Yes. Give me the numbers. 1.9 lakhs pay 22%. 41. Huh? Power 1. 41. 3. 800. 41800. 2.8 pay 12.5. Kavya. Number. People, it is 112A. Please reduce 1.25 lakhs. Please reduce 1.25 lakhs before you compute the tax rate. Yes, so it is 2.8 lakhs minus 1.25 lakhs into 12.5%. Number is 19. 375. 3.9 to 12.5 directly. 750. 1.3 15%. 19,500. 19,500. Take all the totals and put it in the last column. 1 lakh 25 29 425. 1 lakh 29 425. Done with CG? Yes. This brings me to the last one, which is called IFOS. Which is called IFOS. People, what do I have in IFOS? What do I have in IFOS? I have rent from vacant land. Yes, I have rent from vacant land. Number is, again, if I notice, I think it's from November to Feb. It's not even till March, it's November to Feb, which means the number is 20,000 into 4. $20,000 into 4, 80,000. People, I am an IFOS. Can I claim municipal tax? Any standard deductions? I can claim land leveling charges. Had it been a normal business, I cannot claim that also in the current one because opting for BAB. Yes, so minus land leveling charge within bracket, not allowable. number is 0, income becomes 80,000. Income becomes 80,000, taxable at taxable at 22%. 17600. 17600. Any other heads? All done? All done? Yes, total the numbers. Totaling only the last column. I had 38,500, 22 lakh 40,000, 3 lakh, 1 lakh 29,425 and 17,600. Totaling the numbers, I have 7 lakh 25,525, 725, 525. What is this called, people? This is called basic tax. Gross total income. I have to add. Go for it. Plus surcharge at the rate of 10%. Number is 72553. Yes, decimals get immediate round off. 72553. Total number is 798 078 798078. Add cess. People, cess ka short form. You can write HND cess. HND cess is allowed. Number is 21. 31,923, totaling to 8 lakh. अच्छा, राउंड ऑफ नंबर है क्या? व्हाट अबाउट? हाँ ठीक है, इतना तो मैं प्लान नहीं किया था. 8,30,000 is my answer. Is my answer clear with me? Yes, this 8,30,000 is what we call as total tax liability. Is what we call as total tax liability. Clear with me? Yes, this is how the whole format template is. Any doubts on this? Good enough to go? Yes. Now this is what is the maximum level of difficulty you can expect if a tax rate question comes, which I told you will not come in exam. Question number 1 is all about compulsory question. Once I think a 115 BB question came in exam where they gave you the complete format of PGBP and then they asked you to compute the tax rates where two things were there. One was that land with no depreciation, the other was normal incomes. Along with that TP adjustment. So three things were there in that question just to confuse you off, but other than that it was an easy question to be answered of. Clear with me? Yes, you can expect this in one way, people. If 115 BAB is coming in exam, the PGBP adjustments will be easy because they want to more test you on tax rates. Yes, if you're not getting 115 BAB, then I'm going to test you more on PGBP adjustments. That is what is going to happen. Yes, however, what I've realized by now is that after so many years, IC has come to a standstill point. Yes, they're not able to find any more innovative adjustments. All adjustments are getting repeated. Except for the amendment related adjustments. If any amendments happen in the current year, that alone will be a new adjustment. But other than that, everything else is getting repeated as it is, which means all adjustments are already there in your books. You just have to mug up the book and go. You'll get the exam automatically. Yes. Please don't mug up the book, but that is what the request is. Clear with me? क्या हुआ? किसका? शॉर्ट टर्म लिया क्या उसको? I think I assumed that one is a short term, is it? This is mutual funds. Okay, let me check this and come back. I know last year there was an amendment for unlisted bonds and debentures. I think the same adjustment was also brought in for unlisted. Yeah, market link debentures also. मैं dates check करके आपको confirm करता हूँ. Yes, as of now, what we have done is fine enough. If we have to make some changes, we'll make it accordingly. Yes, when we anyway read capital gains, will come up to you. Yes, but anyway, this is what the template format is. Any doubts on the template format? Good enough to go? Yes, this is how you have to understand your 115 BAA and BAB question. Now, people, because I've completed the question, if you have a question like this, you also have to write a few notes. Yes, notes like, why are you treating something as not allowable? Yes, which will be basically saying any incomes which are not incidental to manufacturing business would be taxable at 25.168 without any expenses. That's one. Second, if you notice, so many assets have been taken over by Santa Limited from Banta Limited. Yes, so Santa is taking over so many assets from Banta Limited, which means two things can happen. One, to verify whether you violated any 20% condition, for which you will have to write a note saying we have not violated any condition because that 20% is only for plant and machinery, not for other assets, Since no plant and machinery was acquired, the assets are eligible for benefits. Yes. Second, you'll also have to make an assumption that even though assets were not acquired, technically complete assets have been taken over from Banta Limited, which means it can be assumed as splitting up or reconstruction of an existing business. So you have to also put a note saying we are making this assumption that there is no split up or reconstruction of existing business. So all that notes is what is given here for your understanding purposes. Clear with me? Yes, again, not relevant for your notes, but nevertheless be very careful on these kind of things. Good to go? Yes, any doubts on this part? Clear? Yes, very good. With this, people, we are done with what is called as company taxation also. Any doubts still here? Aage bade? Yes, good. The last thing which is there is what we call as cooperative societies. The last thing what we have is what we call as cooperative societies. Now, before I proceed forward, help me understand what do you mean by cooperative society? Not really. There is nothing called Cooperative Society Act, by the way. There is something called Societies Registration Act. That's not a mandate. That's not a mandate. Tell me, people, what do you know about cooperative society? Can you think of an example? मेरे को भी लगा ही था. Gokuldam Cooperative Housing Society. Next. Very good. Arvin is one of the beautiful examples. What is happening in those things? How do you look at something and decide it's a cooperative society, basically? Why is Arvin, by the way, a cooperative society? गोकुलधाम में क्या हो रहा है? मेंटेनेंस तो तुम्हारी बिल्डिंग में भी सेम ही है. Yes, people, cooperative comes up with a very simple thought. If you think about this carefully, normally a person who comes up with another person is doing this with an intention to make profits. Any person engaging with another person is doing it with an intention to make profits. Yes or no? Yes. Now imagine a group of people coming together. There is a farmer. The farmer is trying to sell his products. No one is ready to buy because India, yes, farmers are not treated so well. Therefore, you're not getting the minimum price unit. Yes, you're not very happy with the discussion because you're a sole guy trying to fight things out. In which case, what will you try to do? You'll try to bring in other farmers. You'll see that there are some farmers like you only. They're also being mistreated. You all will come together and now become a union. And you union will now go to the market and try to say that, boss, we will all together only sell you at this price. If you're happy, you take it. Otherwise, we are not giving it to you. We're not giving it to you. When you have a bigger union to yourself, the chance of you getting your share is better. Yes or no? Yes. Now, if you think about this carefully, between farmers itself, there can be challenges. I am a person who has growing of tea. There is another person who's growing cotton. There is another person growing maybe wheat. Yes. Now, if I have to sell my produce, I will go to this farmer, sell it at profit. He will sell it to this farmer, sell it at profit. He will sell it to me at a profit. We're all making profit amongst each other. At the end of the day, we are all part of the same building. We're part of the same building. Yes, we're all together farmers. We're all a union together. We would like to make profits between ourselves. Would we like to make profits between ourselves? No. What will we say? Boss, whatever we are engaging with each other, we will not like to make profits. Everything we sell outside is where we'll make profits. Agreed, not agreed? Which means now all the farmers are coming together with an intention to help each other. Agreed? Agreed. Yes. Now my question is very simple. I am having wheat in my hand and I'm selling it to the farmer cooperative society. The farmer cooperative society. Tell me, did I make profits out of it? Did I make profits out of it? Maybe, maybe not. Maybe, maybe not. But in return, I also got someone else's produce. Someone else's produce, which means whatever I sold came back to me in a way. Whatever I sold came back to me in a way. Yes or no? Yes. What is happening? I am selling something at a profit, reducing it back in a profit manner, because he will also sell it at a profit to me, which means technically money is flowing between ourselves. Money is flowing between ourselves. Tell me this very carefully. The wheat which I sold to the society, taxable, not taxable? The wheat which I sold to the society, taxable, not taxable? The wheat which I sold to the society, taxable, not taxable? It is not taxable. It is not taxable, because if you think about this carefully, I never sold it with an intention to make profit. The benefits has come back to me in return. The benefits has come back to me in return. Best example is societies. Gokul Dham society, all cooperative societies. People, a cooperative society collects from you what? Maintenance, which means for that society, the money which they got from the members is nothing but an income. Is nothing but an income. Should the cooperative society pay tax on this? Should the cooperative society pay tax on this? Is a question. Yes or no? Did they get money? They got money. But think and tell me, people, why did they get this money? To incur it on the building, to incur it for the members. Yes or no? Which means now there were two options. Option number one, Rahul is a part of the building. Rahul can come and say, why should I pay you maintenance? If it's about the building, I will itself take care. Correct, not correct? If it's about the building, I can itself take care. I don't need your support for it. But a solo guy cannot do everything, which is why we all together are pooling in money so that the building can be taken care. Yes or no? If you think about it, is the society really earning income from me, or is the society merely acting as my agent? The society is merely acting as my agent. He is collecting money from everyone and he's doing benefit for me only. Correct? No. If society was not involved, what I would have done? I would have directly paid the expense. Now, just because I'm giving it to the society and society is paying the expense, does it change the characteristic? The characteristic remains the same. Agreed, not agreed? Yes. This in income tax is called as a person cannot earn income from himself, because here the society is nothing but your agent. When the society is nothing but your agent, you have given money to yourself. You have given money to, in which case, can I tax that income? Can I tax that income? No. This is called an income tax principle of mutuality. Principle of mutuality. Principle of mutuality basically comes and says, when I'm giving money which is in return going to come back to me itself as benefit, then in that case that income cannot be taxable. The income cannot be taxable, because then the other person is merely acting as my agent. He's merely acting as my agent and therefore should not be taxable. Should not be taxable. Which is why, people, every money which you give inside a society, all those monies are never taxed. Are never taxed, because the society is collecting money from you only to give it back to you. Only to give it back to you. Are we making sense? Yes. Similarly, people, if all the farmers are coming together and all the farmers are coming and saying, I'll put 1 lakh, I will put 1 lakh, I will put 1 lakh, I will put 1 lakh. Everyone compiles this 1 lakh. And one farmer will come to them, he'll say, here is money for you as a loan. You can use this money and run your business. Later, when you have money, give it back to me. Give it back to me. What is happening, people? All the people are coming together, pooling in money, giving it to one person with an intention to make profit or to support each other. To support each other. Did I make a profit out of this transaction? Maybe. He will give me interest, so I may make a profit. But the profit again will be used for same farmers, which means money is simply getting circulated between us. Money is simply getting circulated between us. Should I tax this transaction? Should I tax this transaction? No. This is called principles of mutuality. Principles of mutuality. Let me help you understand this context a little better. For all my Marwadi families, your mothers and all will have a very, very nice small group called as kitty party. Yes or no? You would have seen it. Yes. Now kitty party rules in India, people. Every family has to give some rupees. Yes, every family will give some rupees. Every month, the parents will collect some rupees, give it to the party. And then 1 month, what will happen? Some of the friend has to conduct an event. And if she conducts an event, the money will go to her. The money will go to her. Yes or no? Yes. Think, people, we all collected money, gave it to one person to conduct event for me. To conduct event for me. Money is circulated between us only. Should the kitty party income collection be taxable? Should the kitty party income be taxable? This is principles of mutuality. This is principles of mutuality. Agreed, not agreed? Yes or no? As a standard practice in income tax, a cooperative society, whatever transactions take place are never taxable. But here comes the big change. Avin is a case where a lot of farmers have come together and has made this Avin product. Which is being sold in the market. Tell me, people, the money which the Avin team is collecting by selling you the milk, tell me, is it taxable, not taxable? Is it taxable, not taxable? Because you are now selling it in the market, making profits. Third parties are getting involved, in which case the transaction becomes taxable, because now the money is not between members alone. The money is coming from outside. Correct, not correct? You are now not making profits from internal members, you're making profits from outside. That itself becomes a commercial transaction, becomes fully taxable. Agreed, not agreed? Yes. Now you may come and give me a defense. Rahul, in Avin, no, I can get that membership card, and if I get that membership card, the 20 rupees packet will be given to me for 15 rupees. You have seen that? Yes. Rahul, now I am an Avin member. Now whatever income is the Avin earning from me, taxable, not taxable? Taxable, not taxable? It is still taxable, because people, just because me getting a membership from him does not make me a party to the farmer contract. The whole discussion is between the dairy farmers. Profit should be between them. Money should be collected by them. Money should be used by them. Here is a case where I am only acting as a member, giving you extra money as commercial transaction. This again becomes taxable. Because at no point of time the 15 rupees will come back to me as benefit. Is it going to come back to me as benefit? Am I ever going to go back to Avin company and coming and saying, sir, I have that membership card with me, 15 rupees I gave you, give it back tomorrow? Can you ask? No, you can't ask. Agreed, not agreed? Yes. Cooperative society basically is a group of persons who are pooling money with each other in order to support each other. Are we making sense? Yes. In principles of mutuality, we make a confirmation saying a person cannot earn income from himself. And therefore to that extent the incomes are all exempt. Only when you start entering into commercial transactions, I will start taxing them. Are we making sense? Yes. Apo, if I give you some small examples, people tell me if it is a taxable component or not a taxable component. Yes. Good. People, we have created a team, group of boys. We have decided together we will go gym. So a group of boys have decided we will go gym. Everyone is putting in 1,000 rupees, and we have bought some equipments for ourselves. So we're using this equipments for gymming for ourselves. Now obviously we all came together and grouped money. So one of our friends would have collected the whole money and bought the equipments. The person who collected the money to buy the equipments, for him it's an income. Tell me, taxable, not taxable? Because I am giving money to myself in return. Tomorrow the assets will be bought for me only. This is principle of mutuality. Correct, not correct? Yes. Same example, people, you would have seen these Jito clubs. For those who would have heard, Jain Jito clubs. Yes, you are giving in money and Jito is conducting events for you. Tell me, money given to Jito for conducting events, taxable, not taxable? This is not taxable. Again, people, when Jito event happens, what happens? You give money and Jito never asks you to pay anything extra. They give you free access to the events. And therefore it becomes not taxable. However, there are some events, sometimes like Sharan Hegde and all came, Zakir Khan and all came, that time they asked you to pay money. Those money which they collected is fully taxable. Because now it became a commercial transaction. Correct, not correct? Yes or no? Same way, people, you might have go to libraries. There are so many libraries. In the library, you are giving them money to get access to the books. Tell me, you have given money to the library to get access to the books. Liable to tax, not liable to tax? Not liable to tax? This is liable to tax. This is a pure commercial transaction. But Rahul, I'm getting books in return. Doesn't matter. You're still doing a commercial transaction. You're still doing a commercial transaction. How do you conclude something is taxable or not? Very simple. When the money comes together and in return is going to come back to you in a benefit or another, third parties should not get involved. The moment a third party gets involved, it is no more a cooperative society, it is now a commercial transaction. Any doubts? Clear? Yes, good. Last case law for you people. We'll discuss this when we go to the cooperative chapter, but I'm giving you the case law. Situation was like this. I am a group of people where we simply do one thing. We give money to each other. In the form of loan support. Yes, so we all collect money together and we give it to each other in the form of loan support. Tell me people, the money given is taxable, not taxable? Money taxable, not taxable? Not taxable. It is between us. But if you think about it people, the money which I'm giving to you, I need to be generating some money out of it. Only then can I give you extra money. Yes or no? So what happened is one of my members was a bank. What we decided is all people will take the money, give it to this bank, and bank will deposit it as FD. So that the FD earns interest. At least that extra money will now help me only. All the members. So what happened? We all took the money, gave it to the bank put it in FD, collected interest and gave it back to me. This interest which I got in my hand, I now used it for my members. And therefore I contended this is principles of mutuality. Because the person giving me the interest is my member. He's also a bank, but he's my member. So my member is giving me interest. Therefore this is principles of mutuality. However, assessing officer came and said, boss, where did you give the money? Bank. How did bank give you interest? By giving this money to other parties as loan. How do you tell this is not a commercial transaction? It should be taxable as IFRS. You are the judge now. I have told principle of mutuality. Officer says this is IFRS. Tell me who's right. Why? Because people look at the money, look at the flow of the money. From my hand, it went to the bank. Still a member, no problem. The moment bank put it in FD, still my money, no problem. But after this money was put in the bank started giving this money to outsiders. As loan. The moment he gave it off as loan, this now touched the third party hands. The moment it touched third party hands, it went out of my circle. It is no more a mutuality principle because someone else is getting involved. And therefore this became a fully taxable transaction. At the same time, when you gave it to the bank gave you interest in your membership capacity or in his personal capacity as a bank. Did he give you this interest because he's a member to the society, or is it because you are acting as an holder in the bank? You're acting as a holder in a bank, which means the interest which you got is in his commercial capacity. Can it be treated as a principle of mutuality? No, cannot be treated as principle of mutuality. Yes or no? Yes. The point is very simple, people. When I am taking money, giving it to my farmers, farmer gives me interest. This is exempt. But if I'm taking this money, giving to a bank giving me interest is taxable because now it has touched the third parties. Are we making sense? That is what we call as a cooperative society. Now in India, cooperative society can be of any type. Recently, cooperative society is growing much. Like Avens, we have now cooperative banks. We have now cooperative related housing societies, cooperative banks, cooperative dealing in shares, cooperative dealing in everything. So many cooperatives have come up in India, people. We have producer companies. We have so many other things happening in cooperative sector. Problem what has happened is cooperatives get additional benefits in the format that they will run as a company but will not register as a company, which means their compliance burden is lower. And therefore a lot of people have now moved away from being a company to becoming a cooperative society because ease of compliance. At that stage is where income tax realized, boss, if you think about it, cooperative looks the same as company only. Unnecessary, you're just creating a different legal entity altogether. Yes. So income tax came up with a proposal saying we will now recognize cooperative as companies. We will now recognize cooperative as companies. We don't care. You give me a big English, I don't care. I will still call it a company model, which means all procedure is same as companies. All procedure is same as companies with a small twist. Initially, people, when cooperative society was incorporated, income tax again did the same thing. He said, we will give you two regimes. One is called one is called old tax regime, and here is where the whole problem started. People think and tell me, a cooperative society is being created for what? To support its members, which means should you be having commercial profits? Should you not be having commercial profits? You should not be having commercial profits. If you have a commercial profits, am I happy? Not happy? I am not happy. Income tax came up with a proposal. If you are going to have commercial profits, tax is going to be like this. For the first 10,000 rupees, for the first 10,000 people, normally what is the slab? 2,50,000. Slab is 2,50,000. Here it says for the first 10,000 rupees, tax rate is 10%. Tax rate is 10%. Basically, for a cooperative society, there is no basic exemption limit. The first 10,000 itself is 10%. There is no zero. There is no zero. For the next 10,000, jump the number, 20%. And for everything else, I will tax at 30%. This is how cooperatives were being taxed. This is how cooperatives were being taxed. People, am I being fair? Am I being fair? Am I being fair? Definitely not. I'm not being fair, because had I been an individual or an AOP, at least up to 2,50,000, I would have not paid anything. Here, me being a cooperative society is charging me so much. Yes or no? Yes. That is when later on income tax realized that the rates are very unreasonable for a cooperative society, especially now that everyone is becoming a company model, which means they left the rate, but everything else became company same. Which means income tax started coming and saying a cooperative society will be surcharged in the same manner as a company. Rates are help no 0, 7, 12. Yes, people, will I use 0, 2 and 5? Why? Cooperative society is only for India, not for foreign companies. Yes, so 0% is for total income less than 1 crore. This is 1 crore to 10 crores, and this is more than 10 crores. This is how surcharge happened. But I was still not happy. People, you changed my surcharge, but you did not change my tax rate. And I told you I'm working as a company model. Which means you have to give me the same benefits as a company. Which is where income tax came up with a proposal saying, yes, we will introduce special tax regime. What special tax regime? Hey, companies, what did I give? BAA and BAB, where BAA is for any domestic company and BAB is for any domestic manufacturing company. Income tax came up and said, we will now introduce 115 BAD. ID. C went to individuals. So A went to company, B went to manufacturing company, C went to individuals, D came to cooperatives, and then 115 BAE. That's all. We introduced 115 BAE. People, 115 BAD is for all domestic cooperatives. And BAE is for all new domestic manufacturing companies. Cooperatives. People, help tax rate is a revision for you. Tax rate is same as B. Very good. Same as 115 BAA, and here it is same as BAB. Which means we don't need to learn this, we just need to understand We just need to understand what is the company rates. Copy paste is for cooperatives. Copy paste is for cooperatives. This is what the regime has been introduced right now. Yes, so a cooperative, people tell me, if I am a cooperative, will I ever go for old regime? Will I ever go for old regime? Never will happen, because I have to pay tax from 10% on the start of it itself. On the start of it itself, I might as well come for new rates. I might as well come for new rates, which is why most of the cooperatives have shifted off to BAD. And if you're a domestic, then they've gone, sorry, if you're a manufacturing, you've gone to BA. That is what the sections are. That is what the sections are. Any doubts on the section? Yes, there is only one thing to be kept in mind. People, if you remember, in BAA and BAB, we said the moment you go for new regime, you are not applicable for, you're not applicable for, no, you're not applicable for MAT. You're not applicable for MAT. The moment I'm going for new regime, I don't have to levy MAT. I don't have to levy MAT. People, MAT as a concept is introduced only for companies. This is a cooperative. Will he apply MAT? What will he apply? Very good. AMT. He will apply AMT, which means here they say only one change. Instead of talking about MAT, I will talk about AMT. So they'll say if you are opting for BAD, you don't have to opt for AMT. If you're opting for BAE, you don't have to opt for AMT. Concept is the same. Nothing is changing. Nothing is changing. Are we making sense? Yes, this is what your tax rates are. Yes, so cooperative society people tax rates are for the first 10,000 taxes. Next 10,000 is 30%. Surcharge is 0, 7 and 12. If I'm going for new regimes, I have 115B, A, D and BA, same as BAA and BA. Very good. That is what the rates are. That is what the rates are. Any doubts on this? Yes. Never has a question come in exam. Never will the question come in exam. Never will the question come in exam, because people normally also there is one other problem. When it comes to cooperative society, I told you most of the incomes are exempt. For the ones which are not exempt, we have a separate section in chapter 6A called as ATP. Which comes and gives you special benefits for cooperative society if you are a farmer society, producer society, all those kind of societies, which means you will normally like to claim those deductions, and the moment you end up claiming those deductions, income becomes 0, and income itself is 0. Which regime will you go for? Doesn't matter. Doesn't matter. What will you claim for? Yes, I would prefer to go for old regime because I get my deductions there, so I might still go in old regime and pay 0 tax. Cooperative societies do not pay tax in India unless it is AVIN kind of a system, and AVIN is paying tax under new regime because anyway don't get ATP. They don't get ATP. So the answer is very simple. If you can claim ATP and income becomes 0, go for old regime. If not, go for, that's what the answer is. That is what the answer is. Any doubts on this answer? Clear enough to go? Yes, good. We are done with the chapter, people. Let's see what and all we have learnt off. We have to mark a few things. Let's mark a few things off. Yes. Yes, good. Question says, when it comes to companies, we have something called 115BAA. 115BAA is applicable for all domestic companies. We have already marked that part off. Yes, then it came to BAB. BAB, you're going to keep this table important, people. This table is the most important thing, where the table will come and say, if you're into manufacturing, rate is helper 17.16. If you're into capital gains, tax rate is normal rates. If you're into STCG with no depreciation assets, 25.168. With expense, without expense? With expense. If you're claiming IFOS and HP, 25.168 without expenses. And if you're going to have any kind of unreasonable profits, 30% is the tax rate. Yes, people, for your convenience, please make it somewhere here. If you can write STCG on capital assets, no depreciation is allowable, with expenses. With expenses. Correct? Yes. Yes, very good. People, in the next page, you have this unreasonable profit, which I've already marked it off, so that is also critical. Apart from this, in the conditions, you don't have to remember anything for exam. Yes, none of these conditions are going to be relevant for your exam because you're already in previous year. You're already in previous year 25-26. All these conditions, if at all had to be violated, would have done in that year itself. Yes, when you had last incorporated this company in 23-24, that was the last year you could have violated any of these conditions, which means they are no more relevant for your exam. They're no more relevant for your exam. So you can ignore this whole page off. Nothing of this is going to come in exams. That's my guarantee to all of you. Clear? Yes. Apart from that, people, if you go to the next page now comes and talks about all kinds of benefits which you can't claim. Now this is what is all your major expenses and deductions which you have to keep in mind. Yes, but like I told, rather than mugging it up from here, let's do it in the respective chapters. I don't want to waste time on this. Let's do it in the respective chapters. In all the respective chapters, what I've done is next to the section itself, I put a bubble box. The bubble box will come and clarify whether it should be there for old regime or should be there for new regime. If it is not there for new regime, it will have a bubble box. Which will make it easier for you to understand it then. Yes, so we don't have to read any of these. Clear with me? Yes. On the top of your head, people, items which we discussed earlier, items which are not eligible under any regimes. Items like chapter 6 reductions. Next, we discussed 235 AD investment businesses and 10 AA SEZ businesses. All these are major things which are not eligible. Apart from that, what they have taken away is something called additional depreciation. You're not eligible for any additional depreciation in the new regime. That is also not eligible to you. Yes. Apart from that, people, most of the items is something which you can automatically understand when you read the sections of. Nothing critical is going to happen from those sections. Clear? Yes. Great. Apart from that, we moved on forward to your 115 BAC. People, this is just a summary chart for you to understand the difference between BAA, BAB and normal BA. That is what I've given to you. Not relevant at all. More for your reading, more for your reference. Yes. Next, we are moving on to 115 BAC, which talks about the tax rates. We have discussed in point number 1, the tax rates are incremental 4 lakhs with an incremental 5%. However, this is not applicable on special incomes. Special incomes continue to tax at special rates. Yes, and we discussed about your rebate. Rebate is eligible for all total income up to 12 lakhs with an exemption limit of 60,000. Not eligible on any special incomes. Yes, then we have marginal rebate as a concept. Surcharge is given to you, marginal relief is given to you. Here are 3 benefits which we are going to discuss at a later stage. Yes, this is not relevant at final level because these are more inter topics, but you need to know it for DTAA perspective, that when it comes to people who are opting for new regime, the default tax regime, standard deduction is 75,000, whereas if you are in old regime, standard deduction is 50,000. Yes, that is something which we're going to write notes on. We will give you the notes that time. Clear with me? Yes, so we don't have to read that. Apart from that, the other benefits which we have discussed, people, the same benefits are going to move out. Yes, none of these benefits are relevant for your exams because these are all inter-level benefits, not going to be tested at final level. So please don't worry about it. You can ignore the whole thing part of. Yes, and then we move on forward to what is called as choosing the regime. We have discussed about this. Be careful on how you write your old regime and new regime of. And then we have BAD, which talks about cooperative society, and BAE talks about manufacturing cooperative society. Are we clear? Yes, this is what it is, people. Now, if I have to clarify this to you, in this whole chapter of, I don't know what, 20 sites? 9 sites, 10 sites are there. Yes, in this whole chapter of 10 sites, if you think about it carefully, we are only going to read 2. We are only going to read 2. What is the 2, people? We are going to read this table for the tax rates. We're going to read the lines on the top, which is going to give you the 25.168, and then we're directly going to read the page on 115 BAC. Yes, that is all that you're going to read in this chapter. Nothing else is relevant from this chapter of. Yes, which is what I've been repeating myself again and again. While I may give you a book of 500 pages, the worth of this book is only 100 sites, 100 and on sites, not more than that. Yes, my only request to all of you is exam days pe don't come to this mind where you say, no Rahul, 500 pages pura pada to hi pass honga. You read, it doesn't matter. Yes, because in the whole 500 pages only 100 is of worth. Only 100 is of worth. So focus on the 100, you'll easily get the paper off. Yes, and if you have to only read 100 papers for your exam, that means revisions are going to be once, twice, thrice, bare minimum. Thrice is the bare minimum from my side. Yes, thrice is the bare minimum from my side. If you're going for an exam of DT without 3 revisions, you might as well not write it. Yes, you might as well not write it, is what my request will be. I am trying my level best to trim down the book to the best extent possible. So keep it to that extent alone for your examinations. Are we clear? Any doubts on this part? Good to go? Yes, very good. Now people, this same chapter has an extension, which I have taken away from my material and I've put it in a separate chapter. The next heading called as taxation of unexplained income. Something called as taxation of unexplained income. Without even looking at the chapter, I can tell you the chapter in one line. Heading says taxation of unexplained. What do you mean by unexplained income? Incomes which you did not explain. Incomes which you did not explain. Who is asking for explanation? Assessing officer. So what does this chapter say? When you go, an officer asks you for any explanation and you don't give him the explanation, he will tax it at higher rates. He will tax it at higher rates. Ho gaya chapter khatam. This is the chapter. Yes, the chapter simply comes and says, when you have an explanation to be offered, please offer the explanation. If you don't offer the explanation, officer will take it and tax it at higher rates. Now what is the higher rate, people? Higher rate is 78%. The higher rate is 78%. How does 78 come? It is 60 plus 25 plus 4. It is 60 plus 25 plus 4. Now what is 25? 25 is my surcharge, 4 is my cess, 60 is my basic tax. Now I want you to clarify this before I proceed forward itself. 25% is a flat number. 25% is a flat number, which means I don't care what your income is. I have no botheration on what your income is. This income is going to directly tax at 25%, which means whether you do illegal income for 1 rupee, 10 rupees, 1 crore, 10 crores, 5,000 crores, everything goes for 25%. Everything goes for 25%, which means this is the second exception, not the default exception. Second exception, where in a same question you can have surcharge and rebate both. You can have surcharge and rebate both. How? People imagine current year I have only one income, illegal income of 4 lakhs. There's only one thing which I have, illegal income of 4 lakhs. What will happen? Income tax will say on that illegal income you have to tax 25% surcharge because it's illegal income. But at the same time your income is less than 5 lakhs, which means you're eligible for rebate on that. You're eligible for rebate on that. Agreed, not agreed? Yes. Although here is a question. People, rebate is given by you during your return filing stages. This is going to be taxed at assessing officer stage. Do you think you can go to assessing officer and come and say, sir, I am poor, give me rebate? Can you ask that? Can you ask that? No, you can't ask that. You can't ask that, which means practically you don't get rebate. However, theoretically you are eligible for rebate. There is no denial there. There is no denial there. Are we making sense? Yes. Now there is a big problem with this chapter, people, especially from ICI perspective. If you read the lines carefully, I told you unexplained income means that income which you did not to the, when did you not explain to the assessing officer? During your return filing stages or during your assessment stages? During your assessment stages, which means at return filing stage, will I ever admit I have illegal income? Which means during my return filing stage, whatever income I'm going to compute, will it ever have unexplained income in it? No, I will only compute as per normal rates. I will only compute as per normal rates. This chapter will intervene only when you touch assessment stage. Yes or no? Appo, this will never have an impact on your total income question. Hello? Why? People, total income is what you compute. And during your computation, are you going to admit illegal income? No. Appo, this income has nothing to do with your total income question. Should never be part of your total income question. Agreed, not agreed? ICI does not agree. ICI does not agree. ICI will give you weird questions. Suddenly one weird question will come in exam. Total income question. In the total income question, one line will come and say, during the year, the assessee has not reported income of 5 crores. The assessee has not reported income of 5 crores. What should you do? You should say good, doesn't matter. That is what you should say. Yes or no? Here is ICI coming and saying, no, this person has not reported 5 crores. He knows he has not reported 5 crores. He should be good. So what he should do? He should add the 5 crores to his income statement and tax it. On a voluntary, I should tax at 78%. I should tax at 70. People, voluntarily, I should tax at 78%. Enna irukkinga? Correct, not correct? Yes. How the hell will you tax at 78%? Do you think return has an option? Can you open ITR 1? Can you open ITR 1 and come and say IFOS, unexplained income tax at 78%? Unnala tatta mudiyuma? It's not even there in the return. How will you tax it? Correct, not correct? Yes. This chapter only applies at assessing officer stage, but ICI assumes you are very nice. You should explain the income right away. And you should do it as a CA apparently. So you should go to your client and come and say, sir, you found out there is 5 crores. You right now report 5 crores. Pay 78 where? You should tell your clients. Terida? Yes. Imagine going to your client and coming and saying, sir, pay tax at 78%. At the same time, people, if you think about it logically, what is this section coming into for? The section is coming into for because you're not explaining your source. If you are at return filing stage and ready to admit the income itself, you might as well explain the source. Correct, not correct? Yes, when you might as well explain the source on that day, then what the hell are you taxing for 78%? The whole point of taxing at 78 is because officer is not convinced with your source. Correct, not correct? Yes. Apo people, this section does not make sense from an exam perspective. This section should only be asked as an individual standalone question. It cannot be part of your total income chapter. Agreed, not agreed? Yes, but that is what ICA does not agree. Yes, ICA thinks they know better income tax than income tax itself, right? And that's where the whole chapter starts with. The point of this chapter is very simple. The chapter simply comes and says an explanation will be asked by assessing officer, and if you do not make the explanation clear, then he will tax it at the rate of 78%. Any doubts on this part? Are we clear? Yes, sure. This is where the problem started. People, heading said, if you don't explain the source, so the situation happened like this. I went to an officer. The officer said, Rahul, I see there are 5 crores cash you have in hand. I said, yes. He said, Rahul, what is the source? I'm like, nothing, sir. One of the days I saw a friend, I did not like his face, I murdered him, I got money. I murdered him and I got money. This is the source. He's like, Rahul, I will tax at 78. I'm like, who the hell told you you can tax at 78? He said, no, Rahul, I am not convinced with the explanation. Hey, heading says, you did not ask explanation. Correct, no? Where is the heading getting applied? The heading is getting applied when I don't explain. I'm the explain pantane. You are not convinced, it's your problem, not my problem. Correct, no? Yes or no? Yes. So I went to the officer and I said, sir, I have given you an explanation. You did not convince yourself. What is my headache? That is your problem, not my problem. Should I tax at 78%? Should I tax at 78%? Answer is yes. The amendment happened later on, people, where the amendment came and clarified that unexplained income does not just mean not explaining the source. It means explaining the source and he not being convinced also. So the heading now reads that when an assessee is offering explanation, when an explanation is requested by the officer, and if the assessee does not offer the explanation, or if he offers the explanation which is not satisfactory to the officer, we will call it unexplained income. Are we making sense? Any doubts on this part? Ready to go? Yes. So this is what the chapter heading is. Chapter heading says you should either not offer explanation or you should offer explanation which is not satisfactory. If you do that, you will get the answer. Now people, this is the theory extract, which means all I need to do is I'm going to give you 5 headings. You're going to see the 5 headings. You're going to tell the same English. Heading says cash credits, which means the English will say where the officer is requesting for explanation about, and you have not offered explanation about, or you have offered explanation about and it is not satisfactory, then cash credits will be treated as unexplained. That is what the chapter is. Are we clear? Yes. So you fill the dashes, I will give the English. Yes, that is what the first thing is. First thing says cash credits. Basically, income tax is coming and saying, I checked your books and suddenly in your books I see there is 5 crores rupees inflow showing in cash. 5 crores inflow showing of cash. I went and asked you for explanation. Either you did not give me the explanation or you gave me the explanation and I am not satisfied. I will take this 5 crores and I will tax at 78%. Any doubts? Clear? Sure? Yes. Case law number 1. Situation is like this. I am a firm. My firm comes and says a capital balance of partners. Hey, my firm is showing a capital balance of partners. So the assessing officer came to me and said, Rahul, you have passed an entry. Entry says cash account debit to Rahul's capital account. Show me what is the source. I'm like, what is the source, sir? Partner gave me money. Who is the partner? I am only the partner. I gave money to, but right now I am representing as a firm. Yes or no? So I am sitting in front of the officer and I am representing as a firm, saying that my firm has received cash from me. So he comes to me and he says, Rahul, explain the source. I'm like, sir, whom are you asking for? Are you asking for Rahul or are you asking for firm? He said, I'm asking for firm. I said, firm sources Rahul gave. Okay, tell me what is the source for Rahul. I'm like, you are not the officer for me. You are the officer for my firm. My officer will ask that question. You don't ask. You don't ask. Apo, you don't have authority. You don't have authority. He was not convinced. What did he do? He taxed 78% in the hands of the firm. He is the officer for firm. He can only tax for firm. So he taxed 78% for the firm. I got pissed off. I filed an appeal. I was like, sir, for the firm, this is the source. Source is partner. Problem is with the partner, not with the firm. How can you tax the firm? How can you tax with the firm? Court said, approved, not approved. Taxable, not taxable. Taxable, not taxable. He said, not taxable. He said, not taxable. Court said, boss, problem is with partner, not with the firm. How are you taxing the firm? The firm has nothing to do with the money. The firm got this money from his partner. Illegal person is the partner, not the firm. You don't penalize the partner for it. You don't penalize the partner for it. Therefore, the case was approved. The case was approved. Nirmala Thai got pissed off. Nirmala Thai went and changed the law. Now the law reads, when a partner has given capital to its firm, and if the firm is not offering explanation of the partner's source, the firm can also be treated as unexplained income. The firm can also be treated as unexplained income, which means now the firm is equally obligated to find out where the partner is getting money from. Later on, this was extended to companies also, but not public companies, only to private companies, because obviously public companies, I don't know where he's getting money from. Yes, so income tax came and said any money received as share capital from a shareholder in a private company also needs to have its source explained. Any doubts? No? Yes? If you tax it for one person, it is not taxable for the other person. You can decide whichever is taxable for. Yes? Yes? Read. It says, where any sum is found credited in the books of the assessee and the assessee offers no explanation about the nature and the source, or the explanation offered is not satisfactory, then the sum credited will be deemed to be his unexplained income. Where any sum is credited as loan, borrowing, explanation offered shall be deemed to be unsatisfactory if the person in whose name such credit is given has not offered the explanation, which means if the firm is receiving money, then the partner's source also needs to be justified. Point number 2 says, where a closely held company, what is a closely held company? Where a private company is receiving any kind of share application money, then the private company also should know the source of the shareholder in order to justify the source. Are we clear? Yes? Very good. Next heading says, unexplained investments. Help English people. Where an assessing officer has asked for explanation of investments, and the assessee has not offered the explanation, or the explanation offered is not satisfactory, then the investments will be treated as unexplained income. Taxable at the rate of 78%. Understand, people? Heading is investments, which means now I'm not talking about incomes, I'm talking about assets. One of the days I came to you, walked and I saw there's a big building for 5 crores. I was like, where did you buy this building from? He's like, nothing, sir, I paid 5 crores. But I looked at your return files. Your return file says 3 lakh every year. How did you earn 5 crores worth of building in 3 lakhs every year? Give me the source. If you explain the source, amazing. If you don't explain the source, he will treat the full 5 crores as unexplained income. Now here is where you have to keep in mind. People, imagine out of the 5 crores, I was able to explain the source for 1 crore. I will tax 4 crores or full 5 crores. I will tax only the 4 crores. Differential is what I am going to tax. Yes. So this says, where an assessee has made investments which are not recorded in the books, then I will treat it as unexplained investments. Are we making sense? Yes. Good. Point number 3, unexplained money. Where an officer has asked for explanation of money and the assessee has not offered such explanation, or the explanation offered is not satisfactory, then the money will be treated as unexplained income. Now people, again, I am talking about money now. And this is money not recorded in books of accounts. Basically, everything you catch in a raid, everything you catch in a raid is what we're going to call as unexplained income. Unexplained income. Agreed, not agreed? Yes. Now I want you to read both the lines carefully. First one says assessee has not recorded his investments. Here it says assessee has not recorded his money. Has not recorded his money, which means these two sections only come into picture when something is not recorded. When something is not recorded. So I am also extra smart. Yes. Situation happened like this. One of the days there was a raid at my house. There was a raid at my house, and during the raid, what happened is they opened the building, they opened the wall, and they saw there is big chappals with diamonds in it. Big chappals with diamonds in it. I'm assuming you understood where I'm contexting this on. Yes, there was a big scam on Jayalalitha's case. For those who remember, Jayalalitha was once caught. After she died, Sasilata was caught on this. Basically, they had a raid at her house, and they found that she has chappals worth rubies and diamonds stored. Yes, chappal kulla they have rubies and diamonds stored. Full display la irukku. Full display la irukku. And it was funny because Jayalalitha was only recovering 1 rupee per month as her salary from her CM job, which means by earning 1 rupee per month as a salary, she was having diamond chappals. Yes, as a salary meko bhi chahiye. I don't know what 1 rupee was it. Yes, so the point what happened, people, is imagine a very beautiful example. What has happened is raid has happened. They found a chappal with diamonds in it. With diamonds in it. Officer came to me, asked me for the source. Asked me for the source. I said, sir, source anal nahi hai. Source kaila illa. Therefore, he said, I will tax at 78%. I said, sir, I'm sorry, that is not possible. That is not possible. He was like, why is it not possible? Section says you can tax. I said, no, sir, you're not reading the section properly. The section says it is only taxable when it is not recorded. Here is my balance sheet. In my balance sheet, I've recorded an asset called chappal worth 10 rupees. I've recorded a chappal worth 10 rupees. Therefore, the asset is recorded in my books. Because the asset is recorded in my books, this section will not apply. Because the line says where it is not recorded in the books. So I went to my officer and I said, sir, it is not recorded. Now you can tax. I have recorded 10 rupees. He's like, but Rahul, diamond is worth 5 crores. I'm like, that is not the question. Question is, did you record? I said, yes. Upper section is not applicable. Whether the number is right or not is not the discussion here. It's not the discussion here. Therefore, I said not taxable. I said not taxable. Tell me, am I right? Tell me, am I right? Don't give me emotional answers. Give me legal answers. Legally, am I right? Legally, am I right? Yes, it says assets are not recorded. I have recorded the asset. It is not of the value. Doesn't matter. Doesn't matter. Agreed, not agreed. Yes, when income tax realized the mistake, came in the next section called as partial disclosure of investments. Here is income tax coming and saying, if you have an investment recorded, but it is not of the full value, it is not of the full value, I can ask you explanation for the balance. And if you don't offer me explanation for the balance, I will tax the balance. I will tax the balance. Are we clear? Are we clear? Any doubts on this part? Yes. This brings me to the last one, people. The last one says unexplained expenditure. People, I have done an expenditure. Officer is asking for the source. I did not explain the source, or the source explained is not satisfactory. Then the expenditure will now become an unexplained income. Now this is a weird thing. This is a weird thing because I am doing an expense. An officer is proposing an income. Officer is proposing an income. What is the example can you think of? Think of an example. Think of an example. I'll give you. Imagine an example, people, where what has happened is one of the days my daughter is getting married. My daughter is getting married, and I had called my officer also to the marriage. My bad luck. I called the officer also to the marriage. He came to my marriage. He came to my daughter's marriage, and he saw the whole arrangement. Yes, one of the days he went and unfortunately met my brother. And he went, Pa, that day we had a marriage. Your brother conducted a marriage, very beautiful marriage. Kitna decoration and all kiya. Any guess on how much he spent? Any guess on how much he spent? Now my brother did not know he's an officer. And Marwadi family people. Yes, we like to show off. Yes, we will go to every single person and say we spent this much for the wedding because we want that pride. Yes, so my brother also went and said, yes, he spent 5 crores for it. He spent 5 crores for it. That is what we had, that much charisma in our family that we spent 5 crores for this wedding. That's how big the wedding is. That is how big the wedding is. Now this officer already had all my income statements. He saw daily basis also. If I compute everything for the next 50 years, if I earn also, I will not get 5 crores. I will not get 5 crores. Immediately I was given a call. And he said, Rahul, come to my office, tell me, where did you generate this 5 crores to spend? I was like, sir, I have spent, no, what is the problem? If I earn only, you have a problem. I have spent it off, then what is the issue? He's like, Rahul, I am not bothered about the spend. I'm bothered about where did you get the money to spend. So which means I'm not focusing on your expense. I'm focusing on the income behind the expense. I'm focusing on the income behind the expense. Don't explain me the expenditure source. Explain me the money source which you have used for expense. I did not explain the explanation, and therefore he added it as unexplained income. Are we making sense? Yes. Now here is the question. People, I went to my officer and I said, okay sir, you want to add it, you add it, no problem. Because you want to treat it as income, you treat it as income. But genuinely speaking, I have spent the money off. Is it there in my hand? No. Above people, what will I propose? I will say, sir, you add it as income and you claim it as expense. Make my income as 0. If I have money only, I can pay you. No, where I have money? Money da poidche. Yes or no? So I went to him and I said, sir, whatever money you want to add, you add. Minus money I spent off. Number becomes 0. Tax is also. Tell me, am I right? Kya problem hai? Hey, kaila kaas entada na kuduku mudiyum. When I have no money, where will I pay from? Huh? घर नहीं है मेरे पास. He looked at my income statement and told 50 years will take me to earn 5 crores. घर कहाँ से आएगा मेरे पास? शादी में. Yes, people, can I make a proposal like this to officer, asking him for explaining, setting off my expense? Will I do that? No. We just discussed when we started the subject, saying when it comes to unexplained incomes, when it comes to any special incomes other than capital gains, you can't claim any expenses. So the answer is in that. The section 115BB, which talks about this section, comes and clarifies that when you're doing any unexplained incomes, no expenses can be claimed as deduction, which means even if you have a genuine expense, I will not allow it as deduction. Are we making sense? Yes, this is an exam question, people. An exam question, and MCQ came in exam once. The question basically came and said that a person has underreported his rent for 60,000 rupees. A person has underreported his rent expense of 60,000 rupees, for which the officer asked for explanation. The explanation was not provided, and therefore the officer has proposed to treat the 60,000 as an income. The assessee has gone to the officer and requested that, sir, the 60,000 which you want to add as income is fine, but at the end of the day, the 60,000 was treated as an genuine expense. It's a business expense. I've incurred it wholly and exclusively for my business. Therefore, I would like this adjusted. I would like to make this adjusted. Therefore, my income should become 0. Tell me, is the statement valid? Is the statement valid? No. Here is where you will come and say, as per section 115BB, once an expenditure is treated as unexplained income, no expenses can be claimed as deduction, and therefore the 60,000 will be ignored. Only the 60,000 which have added will be treated as an income for the purpose of 78%. Are we clear? Yes. So be very careful on this, people. When it comes to unexplained expenditure, two things will happen. If you have claimed an expenditure, I will first reverse it, and then I will add it as an income, which means double payment to you. Expenditure also was denied to you, and money also got added. You have to now pay double tax. Are we clear? Yes. How double tax, Rahul? When I reversed the expenditure, slab rate tax came to me, and when I added it as my income, 78% tax came to me, which means now I've lost double money. Are we clear? Yes. This brings me to the last one, people. Heading says quickly. Heading says amount borrowed or repaid on. What the hell is hundi? वैसे Govinda, correct? Money which you put in Tirupati as Govinda money. Are that we talking about? Is that what we're talking about? Any idea what is hundi? Okay, people, hundi, if you think about it, is not going to be the religious hundi, because hundi religious is not borrowed or repaid. Once money goes there, it's forever gone. Yes, so it's not about borrowed or repaid here. Hundi is a different thing. Let me give you a better explanation. Have you seen this movie called Shivaji the Boss? Yes, there was this one scene, people, in Shivaji the Boss, where basically what will happen is Shivaji will go and he'll collect money from all these politicians. He will go give up a call and he'll be like, half yours, half mine, it's a full department. And he'll collect all the money and put it in a go down. Yes, after that he'll be sitting in his car and the co-actor will come and say, now where's Shivaji? He'll be like, US. Yes, he will travel to US, and when he travels to US, there'll be one guy standing in front of him. He will go and give him a 1,000 rupees note. He will go and give him a 1,000 rupees note. This guy will look at the 1,000 rupees note, match the serial number, and the moment he sees that the serial number is matching, he will give him pounds or dollars, whatever it is. He will give him pounds or dollars, whatever it is. Agreed, not agreed? Yes, people, technically, I had money in rupees, got converted into foreign currency. How did it get converted? How did it get converted? The guy who was sitting in US, he had a contact in India. So what would Shivaji do? Shivaji would take this rupees, give it to this contact person. In return, go to US and collect dollars. In return, go to US and collect dollars. People, for collecting the dollars, he had to show one document. Document was nothing but a 1,000 rupees note. That 1,000 rupees note did not have validity. The validity was on the serial number. The validity was on the serial number. That document is what we call as hundi. The document is what we call as hundi. Why? Because this 1,000 rupees note would have first gone to that India guy, and that India guy would have noticed this serial number. This India guy went to the US guy and showed him the serial number and told him, when you get this money back, give him the dollars. Which means here is where the amount has been borrowed and there is where the amount has been repaid. Correct? No. People, this whole transaction which you're talking about is nothing but a, in Hindi transactions we call it hawala transaction. We call it as an hawala transaction. Hawala transaction is you have money in one place, you need items in another place. You give a person in India, that is called hawala. That other person will contact someone else and give you money there. Will give you money there. That's what the whole hawala dealing is. Yes, so when you want to transfer money, illegal items, weapons and all those things, you engage with a person called as hawala person. Yes, hundis in traditional practice was in 1991 Negotiable Instruments Act. Later on, people started realizing that even everyone was using hundi for terrorist transactions. When hundi started getting used for terrorist transactions, 1881 Negotiable Instruments 1881 was amended to clarify hundis are going forward in India treated as a illegal document. A person should not transact using hundi. When that clarification came, this amendment was brought, and the amendment came and clarified ini mela using hundi, if you're going and doing any kind of transaction, giving money here, taking money there, any such sort nonsense you're happening, that transaction automatically will be assumed as a unexplained income. I will not even ask you. I will straightforward treat this transaction as an illegal income because you were not even supposed to do it. Yes or no? Yes. Line says where any amount is borrowed on hundi or repaid on hundi is received or paid other than by account payee check. If it is happening through bank, it is a legal document. But if it is not happening through bank, then the amount borrowed or repaid shall be deemed to be an unexplained income. People, notice carefully, until the previous one, I always went and asked you for explanation. Until the previous one, officer will come and ask, tell me the source, explain me the source, I will be ready to listen. Did I give you that opportunity here? Why? Because the document itself is invalid. When the document itself is illegal, there is no reason for me to predict anymore. I will straightforward come and say you should have not even transacted with this document, which means you are doing illegal transaction. No questions asked. Direct 78%. Direct 78% is what this section will come and clarify to you. Are we making sense? Yes. People, from an exam perspective, what are you going to read? Nothing you're going to read. You're going to read two things for me. One, if you start this chapter itself, line on the top says where an assessing officer detects any cash credits, unexplained investments, unexplained expenditure, source of which is not satisfactorily explained, the AO shall treat such contingency as unexplained income. Full stop. Which means you're going to remember only one thing in exam. If you want to write English is very simple. Where an assessing officer has asked explanation of so and so, the explanation is not satisfactory or the explanation is not offered, then the so and so is an unexplained income. Any expenditure will not be allowed as deduction. Tax will be at the rate of 78%. You will see it in the last page, people. Please mark the last one alone is important. Yes, the last one comes and says any section 115 BBE will be taxable at an effective rate of 78%. Will be taxable at an effective rate of 78%. And the next line comes and says no expenses or deduction shall be allowed. No expenses or deduction shall be allowed. That is what you're going to keep in mind. That is what you're going to keep in mind. Clear? Yes. The last thing, people, which is of penalty, we'll be discussing when you go to penalty chapter. You won't understand this right now, but in case you want to read, penalty comes and says if you have any unexplained income, you will also be levied an additional 10% of the tax payable as a penalty. An additional 10% of the tax payable as penalty, which means already 78 you have to pay, plus an additional 7.8 you will have to pay. Plus an additional 7.8 you will have to pay in order to justify this whole penalty. But people, if the 100 rupees is your income, 78 department will keep as tax, 7.8 department will keep as penalty, balance will be given back to you. Balance will be given back to you. And the moment the balance comes back to you, people, this now becomes a legal money. This now becomes a legal money because you've paid tax. It is only black as long as nothing is paid. It is only black as long as nothing is paid, which means whatever comes back to you is all legal transaction now. Yes. However, the pain of that is very huge because you have to pay 85.8% on this. You have to pay 85.8% on this. Clear? Any doubts? Good to go? Yes, perfect. This is what is your unexplained income. And with this, we are done with what is called as tax rate computations. Yes? Yes? Good. In tomorrow's class, people, we will be discussing on what is called as agricultural income. You already have this understanding from an inter syllabus, so not much to discuss upon, but we'll definitely have some insights on that. Yes? Once we're done with agricultural income, we will do the review of FS. We'll do the review of FS and then move on to the more technical parts of the sessions, which is very good. That is what we're going to do. Yes? Yes? Perfect. Thank you, people. Have a good day. किस किस का ऑफिस है?